And I'm Katie Greifeld. Bloomberg Open Interest starts right now.
Coming up, tariff rates are coming. President Trump says he'll set the cost of doing business with the U.S. himself in coming weeks, and easing trade tensions, fueling a 4-day winning streak with the S&P 500 on track for one of its biggest weekly gains this year. Plus, we'll round out the week with a mega merger, a major CEO shakeup as well. A lot going on with these stocks. Katie, what do you got?
Well, I want to start with that CEO shakeup. This breaking news from this morning that Novo Nordisk has ousted CEO Lars Froggaard Jorgensen after the stock's roughly 50% fall since mid-2024. That comes, of course, with growing competition for its obesity drug, Wegovy. You're taking a look at ADRs right now. This is a Danish company, but ADRs down about 3.7% at the moment, had been down as much as 5% pre-market, Matt.
All right, and Charter will buy Cox Communications in a nearly $35 billion deal that unites two of the biggest U.S. cable providers. Right now, you see Charter Communications shares down 1.33%. Cox, which had been fully family-owned, the family now gets a 20% stake, a little bit more, 23% stake on the new company.
And on the trade front, President Trump says he will set tariff rates for U.S. trading partners over the next 2 to 3 weeks. He says that the administration doesn't have the capacity to negotiate so many deals at once. And
we have, at the same time, 150 countries that want to make a deal, but you're not able to see that many countries. So at a certain point over the next 2 to 3 weeks, I think Scott and Howard will be sending letters out, essentially telling people, it would be very fair, but we'll be telling people what they'll be paying to do business in the United States.
Anne-Marie Horder, Bloomberg's chief political correspondent, co-host of Bloomberg Surveillance, is in Abu Dhabi, where she's been following the president's visit. And Anne-Marie, it looks like we've got the major trading partners, the EU, China, Japan, India, in talks. And with the rest, the president's just going to offer them a deal, yes or no?
Well, this is what the president has said a number of times. Most recently, last week, I was in the Oval Office with the president when he was announcing that deal with the United Kingdom, and he was asked about where their other trade deals linger, and he said at some point, there's so many partners, we're just going to set the deal and let them know. He said that again today, talking about these trade deals. He says that are in the hopper. The fact that the Commerce Secretary, Howard Lutnick, the Treasury Secretary, Scott Bessent, may end up just sending a letter to those countries, maybe giving them a phone call and telling them this is where we've decided on the tariff rate. Remember, a lot of these countries already have a tariff rate from April 2nd, Liberation Day. All of that has been put on pause. This, I think, is an indication that the administration knows some of these rates were just too high, and that for a number of these countries, they're going to come down. But if there's no formal negotiations, they're just going to reset the rate.
Anne-Marie, I want to go back to this concept of capacity, that the administration just doesn't have the capacity to negotiate so many deals at once. I go back to the trade deal with the United Kingdom. That was custom made. That wasn't necessarily a blueprint that can be applied to a bunch of countries, rather. So it makes sense that when it comes to our big trading partners, they would need a bit more time here.
Well, yeah, also the Financial Times this morning has a story about Japan may actually hold off on a deal a little bit longer. The Prime Minister's feeling really a lot of heat from the automotive sector as well as domestic farmers about making too many concessions to rush into a deal with the United States. So this might not be very simple. The Treasury Secretary on the course of this Middle East trip talked about the fact that Europe has as a collective bargaining problem. So when you look at even some of these big massive trading partners, the talks are still lingering. And when you get a comprehensive trade deal, that can take years, not months, not weeks, years. So for a lot of these big trading partners, it's likely going to be terms of agreement, memorandum of understanding, but to get a comprehensive trade deal, that's going to take a lot more time.
All right, Anne-Marie, really appreciate your reporting. That is Bloomberg's Anne-Marie reporting from Abu Dhabi, where she has been following President Trump. We want to go back to one of the big corporate stories of the morning, and that is Charter's $34.5 billion acquisition of Cox, which will create the largest cable company in the U.S. For more on this deal, we're joined now by Michelle Davis. She is Bloomberg's senior deals reporter. And Michelle, I guess it's not surprising to see this because you think about John Malone. He, of course, is the chairman of Liberty, which is Charter's largest shareholders. He specifically named Cox as a potential merger target all the way back in November.
Yeah, so this is one of those perennial deals that's been talked about for literally a decade. In the cable industry, there are only, when you look at the chessboard, there are only so many combinations that can be made. And in November, John Malone said he thought Charter, because of the increasingly competitive environment that's facing the cable companies, he said they should be allowed to combine with someone. He named Cox as one of those people. He named T-Mobile. He also named Comcast. And what's really interesting about this deal is that, you know, there's this whole narrative that it's really tough to get big M&A done right now, but these two companies felt that the competitive environment is so intense that they really do have to combine to better compete.
Yeah, so Charter is buying Cox, and these assets, these cable assets are just shrinking as obviously everybody cuts the cord, right? So who's next?
Well, this kind of leaves Comcast out in the dust, but they have more of a diversified business model than Charter and Cox do. And what's really interesting right now is that the cable companies, which obviously had traditionally gotten a lot of their revenue from cable, pay TV, they moved over to getting a lot of their revenue from internet, but everyone has broadband internet already. And at the same time, the big wireless companies like T-Mobile, Verizon, they're also offering internet like Verizon Fios. And so it's gotten increasingly competitive. And so companies like Cox and Charter, they're starting to offer mobile phone service. And so the big question is probably what does one of the next phone companies do to try to push back and continue to be competitive in this environment.
Yeah, and it's interesting to see that Charter shares are a little bit higher right now, even though this is a very big price tag. Appreciate the time. That is Bloomberg's Michelle Davis. Meanwhile, the other big news of this morning coming from the corporate front, that is Novo Nordisk ousting its CEO, Lars Froggaard Jorgensen. He took the helm in 2017. He presided over a stock price surge of nearly 700%. That's until competition in the obesity shop market from Eli Lilly in particular turned investors into skeptics, leading to a halving in the share price in the last year. I spoke with Jorgensen just a couple weeks ago about the company's outlook.
When we lower the guidance for the full year, it is really because of what the impact was of compounding in the first quarter and probably also a bit into the second quarter. And we have a relative steep comparator in the second half of the year. So you should see this guidance as one of us really stepping up in the second half of the year and getting to more and more patients and really moving forward in a business environment.
And that was on May 7th. It's May 16th, and Lars Froggaard Jorgensen is out as CEO. Bloomberg health reporter Madison Moeller joins us now for more. And Madison, I think it's fair to say that this was pretty surprising.
Yeah, it's definitely a surprise. You know, Lars has really successfully launched one of the biggest products of pharmaceuticals ever, and you know, deserves some credit for that. But and Novo really helped make this obesity market that we've been talking so much about. I mean, there's two companies really in this space. It's Novo and Lilly, and Novo was first to market with Wegovy, and the problem has been that they just have really struggled to convince investors that they're going to be able to follow that up. I mean, they've had supply issues. They've had disappointments with their next generation trial results. And what we're seeing now is that a company that really rarely changes its leadership. I mean, they've only had a handful of CEOs ever, and the tenure of CEOs tends to be very long. Lars himself has been there for almost 3 decades, not as CEO, but has been at the company for a long time. So this is really a surprise move for a company that rarely makes moves like this.
Madison, how much longer is Ozempic/Wegovy expected to be a blockbuster drug? I mean, are we looking at a situation where they're going to face generic competition challenges in the near future?
Yeah, so semaglutide, which is the active ingredient in Wegovy and Ozempic, that is coming off patent within the next few years. They're also going to be facing drug price negotiations under Biden's Inflation Reduction Act in 2027. So the price of that drug could actually come down substantially in time, they're facing pricing pressures from compounded drugs, and they're also facing increasing competition with Lilly. And we've talked about some of these partnerships that Novo and Lilly are doing with telehealth companies to sell the drugs at a cheaper price to consumers. And so there's definitely pricing pressure on the drugs anyway. And we have Lilly coming with a weight loss pill and another next generation shot that has close to 25% weight loss in trials, and Novo just has not been able to do that same thing.
All right, Madison, thanks very much. Bloomberg health reporter Madison Miller talking to us about the changes at the C-suite at Novo Nordisk. Some more movers on our radar. Applied Materials gives a tepid forecast, and as a result, the shares are down about 5%. It seems to be all about the forecast this earnings season. Then Take-Two Interactive, it's moving up right now, but it's delayed, I guess, the Grand Theft Auto 6 again. This has been an issue. Do you play Grand Theft Auto?
No, that is not really my speed, but it doesn't bode well for their 2026 outlook and trying to conjure one.
Yeah, it's obviously expected to be their big blockbuster. Coinbase has been a disaster lately. After the gift of going into the S&P 500, it faces a lot of issues.
Well, it's interesting to see it higher pre-market. It had a terrible day yesterday, of course, with news of that hack and that SEC investigation, according to the New York Times, but higher by 2.5%, and soon, on May 19th, it'll be in your 401k through the S&P 500 inclusion.
All right, our Bloomberg Intelligence media analyst is going to react to the Charter-Cox deal that creates the top cable provider in the U.S. next. This is Open Interest.
To Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
What is the issue between the type of information that's being collected by investors and the marking issue that you're describing?
But what mark-to-market assets do is it forces honesty into the situation. We're talking right after the DeepSeek model surprised everybody in its efficiency. It took hundreds of billions off of market caps because it legitimately raised concerns that maybe the future of AI was different. I guarantee you that if you look at other portfolios that aren't marked, they didn't move. If private assets are going to eat the world, as they say, with the equity market halving in the number of names, you come to a world that is increasingly an echo chamber. Imagine you have a firm that has some public assets and some private assets. If you see your public assets in AI going down by 20%, you're going to be thinking very, very deeply about what your private assets are worth differently than someone who just has the latter.
To the minute economic news whenever and wherever it happens. I'm Jennifer Zabasanja in Luanda, Angola, and this is Bloomberg.
What is going to be the consequence for U.S. markets? We are basically deep in the European earnings season. Take a look at how we're faring when it comes to Asian markets.
Let's get now to high interest. Look at what's making headlines around the world. New Jersey Transit has failed to reach a contract agreement with train engineers, resulting in the first major transit strike to hit the state since 1983. It affects about 350,000 commuters a day. A wage dispute is at the center of the fight. The union has been pushing for the rail workers' first raise since 2019, while New Jersey Transit calls the proposal unaffordable. Another round of negotiations is set for Sunday morning. And the U.S. Justice Department is launching a criminal antitrust probe into how Live Nation and AEG responded to mass concert cancellations at the outset of the COVID pandemic. The investigation focuses on whether the companies illegally colluded on refund policies. Live Nation is denying any wrongdoing. AEG Presents didn't respond to requests for comment. And billionaire Bill Ackman is calling for the resignation of the entire Harvard board, claiming they are presiding over the destruction of this once great institution. Ackman has been highly critical of his alma mater for its response to anti-Semitism on campus over the past 18 months, saying that only new leadership can fix this mess. The university is also locked in a high-stakes fight with the government, with Harvard accusing the Trump administration of threatening academic freedom after the White House froze billions of dollars of federal funding to the school. And back to one of this morning's top stories. Charter agrees to buy Cox Communications in a deal valued at $34.4 billion. The combined company will create the top broadband operator in the U.S. Joining us with more is Geetha Ranganathan, Bloomberg Intelligence, a media analyst. So, Geetha, what do you think persuaded the Cox family ownership to sell here, and what does this mean for the whole cable landscape?
Yeah, thank you so much, Matt. So, the cable industry, the cable broadband industry especially, has been under intense pressure over the past few years, especially from, the telecom players. So you've had Verizon, T-Mobile, and AT&T kind of come out with new products, both with fixed wireless access, which is also, cell phone-based internet access, as well as fiber. And so cable is kind of facing this double whammy on both ends of the market, both competing in terms of price as well as in terms of quality with fiber. And so this is really a response to that. Cable broadband had the lion's share of the market. It still does, but just a few years ago, it dominated the broadband market, the U.S. broadband market, with about almost a 67% share. Now, thanks to that intense telecom competition, we're down to about a 60% share, and it looks like, they will face this competition over the next few years as well. So this is really just a response to that intensifying competition.
I want to talk a little bit about the logic. I mean, it seems to make sense, obviously, investors agreeing with that when you take a look at Charter moving 4% higher now pre-market. But reading through some of the reaction, it seems like the bet here is on convergence. This idea that in the future, customers will want to buy their internet, their mobile phone services in the same place. Is that your view as well?
Absolutely. And so cable has normally been like the fixed broadband side has totally dominated. And of course, you have the telecom operators on the mobile and the wireless side. And this is really both parties, so both cable and telecom, have been getting into each other's space. And cable now, for the past few years, has really kind of racked up a good number of mobile subscribers. And yes, they are trying to offer a discounted, converged bundle, both with the mobile and the broadband product, to really kind of retain those subscribers. And that is absolutely the play here. Charter has been extremely aggressive in this, price-led strategy with mobile convergence. And this is exactly the rationale and the logic behind this deal as well, Katie.
Who's next, Geetha? I mean, as these cable companies shrink away to non-existence, which is the next one to get bought?
Yeah, we have, quite a few other players as well, smaller players, including, Cable One, including Altice USA. The problem with a lot of these smaller cable players, Matt, is they have just tons and tons of debt. And so leverage is definitely going to be a huge issue. Of course, you have the biggest, or before this, the biggest cable operator in Comcast. They had the largest number of broadband subscribers. But again, I think for them to do any deal and get regulatory clearance, that's going to be a bit of a challenge. So still a few players left, but we'll have to see what happens next.
All right, Geetha, really appreciate your insight. That is Geetha Ranganathan of Bloomberg Intelligence. And I will say, Matt, you have shares of Charter higher right now in the pre-market. Year to date, they're also crushing it on a total return basis, higher by about 22%. We know how the rest of the market is doing.
Yeah, amazing, especially considering the fact that no one subscribes to cable anymore, right?
That is the albatross in the background. Let's look at these broader markets, though. The S&P 500 trying to climb for a fifth straight day, currently higher by about 0.3% in the pre-market. You have big tech also up there with the NASDAQ 100 higher by a similar degree, and it's small caps that are out in front with the Russell 2000 currently higher by 0.5%. We're going to start the trading day with Sarah Hunt from Alpine Saxon Woods. She says that the real-world effect of the last 6 weeks of trade rhetoric has yet to be seen. That conversation up next. This is Open Interest.
Listen carefully. Can you hear the rhythm in the markets? Not just in the syncopations triggered by inflation, but in the preludes leading to global elections, in the dissonance that moves the Nikkei, and the rising course conducted by AI. There's music in the markets, and if you want to learn to listen for it, we'll show you how.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
U.S. tech is influencing global markets.
Technology is driving business across Europe.
Companies in Asia are betting on tech. From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacqua, and this is The Pulse, every weekday only on Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Onen, only on Bloomberg.
Welcome back to Open Interest. One of the big calls from this morning, Bank of America's Michael Hartnett saying that emerging market stocks are expected to be, quote, the next bull market due to a weaker U.S. dollar and China's economic recovery. Joining us at the desk to discuss is Alpine Saxon Woods Chief Market Strategist Sarah Hunt. Sarah, it's great to see you. Happy Friday.
Good morning. Happy Friday.
So let's start there because that's a big, bold call. One that I feel like we've heard before, and it never quite pans out when it comes to that EM outperformance. What's your take?
I think that it depends on a couple of factors, as he even put in the note. If China recovers and the dollar stays weaker, those are two big ifs for that call to work. And I think that if those two things happen, there will be some outperformance. But then the U.S. will also perform really well as well, because if China is doing well, it's because we've sorted out some of the trade issues enough that they are well enough to bring up the EM. So I think that that's a call that will overall be good for all markets entirely.
There was a time, obviously, when EM was all the rage and when all of the most important people on the street were moving to Asia. But that was decades ago. Are U.S. investors really comfortable going that far out the risk curve when they've been doing so well here at home for the last 15 years?
I think that's sort of been one of the issues, is that the U.S. market has continued to outperform. I mean, I also think about it's Europe's here happens all the time, and you do get some uptick in some European stocks, but the U.S. markets tend to, over time, perform better. There may be a period of time in which the EM does well, but then the dollar does have to stay lower, because if you get any resurgence in the dollar, that's very tough for EM markets.
Well, what's your dollar call? It feels like so much right now is actually predicated on the dollar. And you think about where the first order effects of all this trade rhetoric is going, it's being expressed in currencies. So we talk about potential EM outperformance. You also include Europe in there as well. I mean, it seems like that's really a currency call at this point.
Well, I think that the strength of the dollar was knocked down on some of the issues that have been going on in the last 6 weeks. It probably needed to come down somewhat. Where it's sitting right now seems to be a reasonable place, but you have so much uncertainty on big macro calls, and people do express that in currency. I think that's one of the reasons that the gold price has been so strong, because people are looking for something that is X any of the currencies, because generally speaking, it's more of a question of which is the least bad place to be for the near term, as opposed to what's the best place to be. So I think that where we are right now could be okay. If you get a lot weaker on the dollar, it's good for earnings coming into the U.S., but it's also problematic in other directions for us. So it's hard to say. I think right now it's all right.
Sarah, we're getting a headline right now. Zelensky and European leaders are talking to President Trump by phone. We get these red headlines with President Trump, 5, 6 times a day, whereas with Biden, it was like hit 5 or 6 times in his entire 4 years. Can you ignore this noise, or do you have to pay attention as an active investor?
It depends what the noise is about. I mean, there are so many things that are changing. As the trade headlines change, that has been a hugely moving of the market. The Ukraine-Russia issue hasn't moved the market as much as it would be a good thing if we could get it solved, but in the interim, the changes around that don't seem to be as moving of markets as the trade issues have been. But yes, you have to pay attention to that, because there is a lot of news that's being made, and it's very quick, and it changes very fast, right. And it has moved markets. So yes.
All right, Sarah, you're sticking with us through the opening bell, and here's the setup as we count down. Green across the board on the S&P 500, the Nasdaq 100, the Russell 2000. We'll take you through all of the opening action up next. This is Open Interest.
Davos, you were asking a question of President Trump, and he didn't quite answer the question, and he asked you a question. So the question he asked you was something like, why are you not banking certain groups? What is the answer? I don't think he gave you a chance to really answer that question, but what is the answer to that question?
Well, first off, the Bank of America has 70 million consumer customers and millions of small businesses all over the country, all over the world. And so we bank everybody. But the real question was about overregulation, frankly. And so as you look at what's happened is because the interpretations of AML, Anti-Money Laundering, BSA, Bank Secrecy Act, KYC, know your customer's customer, there's a lot of burden upon the banking system to both report suspicious activity reports and do a lot of analysis. And we have to close accounts, so we can't tell people why we did it. And often we're told by authorities to close accounts. That creates confusion. Another area comes up in this discussion is in the crypto area where the regulator said you can't bank crypto operating companies, employees of crypto companies, et cetera. we are allowed to do. We bank everybody, but the operating company, they said that's a high-risk activity. Ask us for authority, and guess what? You would have never gotten the authority. So that came up as an issue. So at the end of the day, it's about getting these regulations right.
We're at the epicenter of a global realignment on a scale not seen for decades. At the intersection between markets, economics, and geopolitics, a forum for sophisticated conversation. This is Bloomberg Surveillance.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Stephen Engel at the Forbidden City in Beijing, and this is Bloomberg.
Moments away from the start of trading, this is Bloomberg Open Interest. I'm Matt Miller. We're looking at gains, although slight on futures, and we actually closed in the green yesterday, so we could be on track for 5 days in a row. One of the best weeks this year. NASDAQ futures also up. By the way, if the S&P 500 in cash closes at 59.79, we'll be back in a bull market. That'll be a 20% gain since the lows of April. You hear the opening bell of the New York Stock Exchange, ALS United, a charity organization, ringing the bell there. But down at the NASDAQ, you've got Galaxy. There's Mike Novogratz in an awesome shirt, and he's very happy because his stock is up more than 2,000% over the past 5 years. Katie, which stocks are you watching?
I'm watching Novo Nordisk ADRs like a hawk because Novo Nordisk has ousted CEOs Lars Froggaard Jorgensen due to struggles with growing competition for its obesity drug Wegovy, which has led to quite a decline in the share price, about 53% since mid-2024. That was specifically called out in the press release, which was stunning to me. You can see ADR is down another 3% right now at the U.S. market open, down about 21% or so year to date, Matt.
All right, Charter is going to buy Cox Communications. We've been telling you this morning in a nearly $35 billion deal that unites two of the biggest U.S. cable providers, and Charter shares are higher, 1%. Not always the kind of thing you see when there's a big deal, certainly not for the acquirer. We're back with Alpine Saxon Woods Chief Market Strategist Sarah Hunt, and another day, another deal. Is M&A really starting to pick up here?
I think it is. I mean, that's one of the things that we were looking forward to collectively as investors this year, was that you were going to have a better M&A environment because you were going to have a potentially less regulatory environment. It's interesting that this is going on, but if you think about all the different pieces that these players and all the different pipes into the consumer that they've had, it's not surprising that those are all changing now because we get all that information in different ways. So, I mean, the market seems to be looking at this fairly positively, but pre-market it's been a little bit up and down. So we'll see how that reaction goes.
You've seen a few deals this week. You've also seen a few CEO shakeups. United Health earlier this week, Novo Nordisk today. It was interesting to see Novo Nordisk specifically call out the share price, that mid-2024, the decline since then, down about 53%. But there's plenty of companies who have fallen by similar magnitudes since that time. What do you make of that?
I think it's an interesting question as to what else was going on behind the scenes, because if it's just a share price issue, go back a couple of years and all of a sudden that share price looks like it's been much appreciated, as opposed to just looking at the period of time from when they almost had a monopoly on the substance to now. And I think that there are other things possibly from a strategic standpoint, like maybe they weren't developing an oral version of this, maybe there are other things that are going on, but it seems a lot to call out just a stock price move for this, especially such a short time frame for that.
Especially when you consider that Lars Froggaard Jorgensen has been CEO since 2017. He's not new. In that time, looking at its peer group, Moderna down 80%, and then you have Biogen down by about 47% or so. So they're not alone in seeing these types of declines.
Yeah, not alone in companies that saved the world seeing these kind of declines, right? In terms of, Katie was going through stocks this morning that have halved in value in the past, well, year to date or the past year. There are a lot of them. You like any of those losers? Has anything been thrown out here after Liberation Day that hasn't recovered?
Well, I think that there are some things that have already started to recover, but that were part of this sort of picks and shovels of the AI pipeline. And you had a lot of stocks that were riding up on the idea that we needed to build a lot more energy infrastructure and a lot more data centers. And I think you've seen some of those come down to more reasonable levels. I think some of the main big seven have already had pretty big move up in price, but there are some issues individually with some of them as well, like the Google antitrust issue and some of the other things that are going on. So I think that there are places where it's still interesting to look, but I think you have to be very mindful now of valuation and cash flow because the equity market indices have come back so high and a lot of those valuations have come right back as well.
I want to talk a little bit about where we go from here. We were talking about the other day how there's still a bunch of recession calls out there, not for an outright recession, but basically you can't take it off the table that it's a coin flip at this point. I mean, where do you stand on that? Because you take a look at the economic data, it's pretty much held up. You've had inflation come down a little bit. It seems like activity hasn't slowed too much, but it's the future that we're all scared about.
And I think that it's the fact that we don't know what kind of lags have gone on in the system because of this. Investors are very quick to look at data and want an immediate reaction. The real world doesn't move that fast. The ships don't come in that fast. So stuff that was canceled, stuff that hasn't been ordered, what ordering looks like in May, all of these things are going to matter a lot in September and October and November and into the holiday season. We don't know yet what that looks like. It could be much more problematic than we think it is right now. It's not fair to say that there's no inflation because of this, because we haven't really had time to see it. And you see companies like Walmart pointing that out right now and saying we're going to be raising prices.
What do you do, though, if we muddle through this? A lot of people would have said, this tariff announcement is an absolute disaster, just like Brexit was an absolute disaster. But then you don't see the British economy tanking, right? It's just kind of ground on.
And I think that that's one of the lessons that we continue to learn, which is that even when you have adverse circumstances, people still do the things. They live their lives, they go to work, they do a lot of stuff. If they pull back on the margin, you get an economic slowdown. We may have a shallow slowdown. It may be worse if you end up with critical component shortages. We don't know that yet, and I think that's part of the issue, and it may be why there's change in tone in terms of we're going to put some numbers on the board for people in the next 2 to 3 weeks, because the uncertainty is what hurts markets more. And right now we're back to thinking we can look through whatever this happens because it's not going to be that bad, while we still don't quite know what it's going to look like yet.
Sarah, great to have you on the program today. Thanks so much for joining us here on set. Sarah Hunt there from Alpine Saxon Woods.
Here I go. It's
go.
Time for my walk and talk. Let's break down this market right now. You have the S&P 500 higher about 0.1%. All it needs to do is finish green for a 5th straight days of gains, which would make this one of the best weeks of 2025. If you look at breadth right now, you have 200 names in the green. You have slightly more to the downside, but it's some of the most important companies that are climbing right now. Alphabet, Nvidia, Tesla. When you take a look at the points basis here, what's contributing to the upside, those are your big guys. On the downside, though, you have a pretty big weight in Microsoft, in Broadcom, in Meta, and Applied Materials in earnings story today. So a real tug and pull when it comes to the tech sector. And on that note, let's take a look at the sector level right now. What's gaining, what isn't? Right up at the top, you have communication services. A lot of that is coming from Alphabet, though Charter helping out a little bit as well. You go down the list, pretty much an even split, slightly more green, but at the bottom, you do have tech, that tug and pull that I was talking about, down only 0.1%, but at the bottom, materials off by about 0.4%, Matt.
All right, we're going to talk when we come back to D.A. Davidson's Gil Luria. He is calling for a complete breakup of Alphabet. He joins us next to explain his call. This is Bloomberg Open Interest.
I'm Alex Rodriguez.
And I'm Jason Kelly.
And we're back with more episodes of our show, The Deal.
The theme of this season, On the Road. We're bringing you more behind-the-scenes conversations with the biggest names in sports, business, and culture, like Melody Hobson.
I started to study women's sports like an 11-year-old studies baseball statistics, and I got dangerous in seeing up arrows.
Susie Wolf.
when you're competing, you're not thinking about any fear or any worries of what could happen.
Josh Harris.
You can't do a good deal with a bad person.
Jay Batt.
At the end of the day, there's never been a better time to be a student athlete.
And more. Stay tuned.
Jumpstart your trading day on Bloomberg Open Interest.
2 hours of single stock stories that are driving the opening bell action.
We'll take you to Wall Street, Main Street, the C-suite, and beyond.
These are companies that are growing their market.
The great companies in the U.S. are the companies hitting the cutting edge. That's a different story.
Get the inside track on what's buzzing in markets.
With the players who are shaping the narrative.
If you have bad earnings reports, you're going to get punished.
They're not buying what the industry is selling.
Join us on Bloomberg Open Interest every trading day, only on Bloomberg.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg. From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
David Weston. Join me for the next generation of Wall Street Week, telling stories of capitalism from business, markets, economics, tech, and climate. Each week, we'll go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
Above all else, it's a mission.
It's done nothing but grow immensely. To me, that's an extraordinary sign.
We can be the change that we want to see.
Watch the all-new Wall Street Week. More than what you need to know, it's what you need to think about.
Welcome back to Open Interest. A quick check on stocks here because that 5-day rally is fading a little bit. The S&P 500 still higher by about 0.1%. We were looking at more robust gains pre-market, but fading across the board right now. The Nasdaq 100 up by a similar magnitude, and you can see the small caps have given up their lead, now neck and neck with everyone else. We'll see how that develops. But it's time now for our top calls. Some of the analyst action in focus this morning. And first up, HSBC is upgrading Carnival on strong booking trends. The firm says that the company has made solid progress on its profit recovery. Next up, we have Foot Locker getting a downgrade over at Barclays. Remember, earlier this week, we learned that Foot Locker is being bought by Dick's Sporting Goods for $2.4 billion. And finally, we have Caterpillar getting upgraded over at UBS thanks to de-escalation when it comes to tariffs, some progress being made with China. That's worth an upgrade, but you can see shares down about 0.4%, Matt.
All right, big earth mover to watch there. Let's get to another top call from earlier this week. D.A. Davidson's analyst Gil Luria says one of the biggest tech companies in the world would be more valuable if it was broken up. Luria writes, the only way forward for Alphabet is a complete breakup that would allow investors to own the business they actually want. And I'm pleased to say Gil joins us now. So, Gil, it's already worth quite a bit. How much do you think it would be valued at in pieces?
If Google was to break up into all its pieces into each individual business, we think the stock could be worth $300 a share. We think that right now, everything is trading at a 15 times earnings multiple. That's a very low multiple for businesses like Waymo, Cloud, YouTube, and potentially the TPU business. Those businesses would be trading at 50 times our earnings or more if they were independent. And Google is really holding them back by keeping them with search, which is now a tainted business, a controversial business that investors are really not willing to put a lot of value on.
Well, it's interesting to read this call in and of itself, but also when you put it against the regulatory backdrop right now, because you do have regulators attempting to break up this company, and you're saying, actually, this would be a good idea. Is this something that you see as actually likely to happen?
This is a catalyst. It's a potential catalyst. The Department of Justice telling Google, break up your monopoly is a potential catalyst, and the company should be leaning into that. Instead of dragging this out and dragging it out in court and having it influence all its decisions, instead Google could just say, okay, we'll spin off the ad network. That would be great, because then that business would trade like the Trade Desk, which again is much higher. and then they could spin off YouTube. Then that would trade like Netflix, which is much higher. Unfortunately, that's not what the management team is doing right now. Right now, they're just dragging their feet. They're going to fight it in court. They're going to try to keep the company intact, which again is not in the best interest of shareholders.
So why? I mean, Sundar Pichai, Ruth Porat, Ken Walker, these are smart people. Are they disincentivized to make a move like that as executives?
They are too focused on profits, on short-term profits. They know that if they spun off all these businesses into individual pieces, they lose some of the synergy of having them in one place. So let's say that instead of earning $11 a share this year, if all the individual pieces were broken up, they'd maybe only own $10 a share. But again, we argue that you're getting paid 15 times the $11. If you were able to get paid 50 times on some pieces of the $10, shareholders would own a much bigger business. So management team is focused on profits in the short term instead of focusing on shareholder value, which is their job.
And Gil, I will note that you're not alone in calling for this. You also have Needham analyst Laura Martin written that the company is worth more in pieces than together, echoing your call here. When you take a look at all the different components, basically all the parts of this business, what do you think the weakest link is?
The search business. While there was some argument whether the search business could continue to be a monopoly and grow at these rates, that really ended when the head of services at Apple pointed out that Google search is now declining on the iPhone. That tells us we've hit that watershed moment where people are ChatGPTing things instead of Googling things. So that business, even if you believe that Google can maintain some of its monopoly here, clearly that's going to be controversial. Investors don't want to invest in a business that could be a melting ice cube, but they do want all those other pieces.
I've noticed that, did you realize the kids are calling ChatGPT Geppetto?
No. What kids? Who?
I've heard so many younger people say, which for me, that's a lot of people, right? But Geppetto. I feel like AI just cancels the need in some way for using Google search the way we used to, Gil, right? I mean, it's the first point of entry, and then you click on the results that you get from ChatGPT or Grok or Gemini, whatever you're using. So that seems to be, like Cox Cable, like it's done.
It does, because all Google gives us, right, is 10 blue links and a lot of sponsors around that, and we have to find the answer. The chats are giving us the answer we are seeking, and while right now that's all types of questions and some of them are not commercial, increasingly the chats are going to be commercial. What vacuum cleaner should I buy? Which toothpaste should I buy? What is the recommended medication and how to take that? What insurance is the best in this particular situation? The chats are going to give that answer. Once they start doing that, you better believe they'll start selling ads. And that's the point where advertisers, instead of putting all of their digital advertising budget into Google and Meta, are going to start having other choices. First and foremost, that's going to be these chat engines like ChatGPT or Grok, XAI. They're going to start allocating some of those digital advertising dollars there. The reason that hasn't happened yet is that there's no ads on ChatGPT yet.
Right.
They haven't turned that on. Clearly, they will. We're getting closer. The most recent hire they brought in is somebody that's an expert at selling ads. It's clear that that's where this is headed.
Yeah, it certainly seems that AI is an existential threat for the search business. Really appreciate your time on this Friday morning, Gil. That is Gil Loria. He is head of technology research over at D.A. Davidson. And Matt, one of the reasons why this caught my eye, this call that Alphabet should be broken up into pieces, is because spinoffs are so hot right now. Bloomberg actually has an index of spinoffs. The ticker there is BN Spin. And if you take a look over a long-term basis, we hit a record high earlier this year. We're going to pull up the chart. We've come back a little bit down, but
that's
back
10
again.
years.
That's 10 years. So you can see that, especially in the past just couple years. They've become even more popular. GE Vernova is a great example. It's up 30% year to date.
So it's true, and when you pointed that out, I looked it up on the comp screen. I always use comp.
That's
and
my
it
favorite
defaults
tool.
to 5 years, and the spin-off index has crushed the S&P and the NASDAQ 100 over the past 5 years.
Yeah.
But if you look at it over 10 years, then the NASDAQ 100 actually does quite a bit better. So
yeah, well, there's been more spin-offs in recent years,
a recent
so
thing.
that has helped performance a bit. Something we'll continue to watch on this show. But you know what else we're watching?
What else are we watching?
We're watching Novo Nordisk.
Yes.
It's lower. Eli Lilly is up right now on news that the Danish drug maker has ousted its CEO. We'll discuss next. This is Open Interest.
Up-to-the-minute geopolitical news wherever and whenever it happens. I'm Anne-Marie Hordern in Buenos Aires, Argentina, and this is Bloomberg.
The Middle East and Africa, vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
Bringing you the latest in tech and AI news whenever and wherever it happens. I'm Tom McKenzie in Paris, and this is Bloomberg.
This is Bloomberg Open Interest. I'm Matt Miller. We are 57 points away from a bull market. Check it out. The S&P 500 right now trading at 59.23, so 56 points away from 59.79. That's where we need to be to climb 20% from the low in April. The NASDAQ 100 already there, gaining 0.1%, as is the S&P. Take a look at what's going on with some of the individual stocks. AMAT down on earnings, off 6%. Charter Communications, even though it's making an acquisition of Cox, it's gaining 2.7%. UNH gaining back a little bit of what it's lost, but it's gotten absolutely crushed over the last few days and really down 50% this year. Coinbase is rising after concerns yesterday of a hack and a potential DOJ probe. Eli Lilly up, and this is actually Eli Lilly, Novo Nordisk, Katie. Interesting, because this is the market, I think, saying, oh, Lars Fruergaard is out, let's sell that stock and let's buy Lilly instead. It's really the market, I think, making a judgment on Novo's move.
Yeah, it's really interesting to see. It's basically like a mirror stock reaction there in those two companies. So let's discuss it more now with Sam Vazzelli. He is Director of Research for Global Industries and Senior Pharma Analyst for Bloomberg Intelligence. Of course, we're talking about the news that Novo is ousting Lars Fruergaard Jorgensen as its CEO. Their reasoning there was in part because the stock has declined so meaningfully since mid-2024. And Sam, I'm curious what this will fix, because you think about where Novo stands right now. They've lost market share in the U.S. market to Eli Lilly. They had underwhelming results for CagriSema. It seems like, you know, it's going to be an uphill climb here.
Yeah, I mean, Katie, in the pharmaceutical industry, magic wands don't really exist. It takes several years to fix a pipeline or to change the direction a company is going. I'm wondering how much of just a rant this was by the shareholders saying, look, we've just had enough, let's move on. The company has done the sorts of deals that perhaps it should have done 5 years ago, looking for new assets, looking for actual orals, not oral versions of its drugs that are injected. And so it lost some of that, but it will take another 4 or 5 years for those things to come fruition. It's already done those deals now. So, but maybe this is just a way of saying, look, we realize that we lost some of that initiative. And if I may, I want to just highlight quickly, this is the company that was leading Lilly on everything. They were at least neck and neck on insulin. They were the first people to bring these GLP-1s to market for diabetes. They were the first to develop a really successful long-acting insulin. Here, they lost the initiative when Lilly developed Zepbound. That's when it all started happening.
Sam, I always think of the business matrix, with the rising stars, the cash cows, the dogs, the question marks that you learn about in college. I guess Wegovy and Ozempic, are they not rising stars anymore? Are they just cash cows now? And does Novo Nordisk have any rising stars in the pipeline?
Yeah, so Matt, this is a really good question. It's more about the rising star, but whose star is rising most? And Lilly's star is definitely rising most. They've done all the right things. They took a gamble on this drug, tirzepatide, that became Zepbound. People didn't expect this to work like this. The biology was confusing at the time, and this is going back 7 or 8 years. So they took a gamble, not an expensive gamble, and it really paid off. Then they've got a real oral drug. Now they've gone for triple action. They're covering the bases, and of course they have other business, cancer, Alzheimer's, etc. It's just a matter of relative rise, right? This market's growing. Wegovy will continue to grow, but I'll tell you who's going to get the most of the lion's share is going to be Zepbound for the foreseeable future. It's a better drug.
All right, Sam, really appreciate your analysis here on this big corporate news. That is Sam Fazeli. He is Director of Research for Global Industries and Senior Pharmaceuticals Analyst over at Bloomberg Intelligence. I also want to point out Viking Therapeutics. Of course, we're talking about the Eli Lilly rise on the heels of this news. Viking is working on an oral obesity drug as well, and shares are shooting higher this morning.
I always think about this. They seem to be in a race, which one can make you lose more weight? But not everybody wants to lose 180 pounds, right?
For some, it's the quality of that weight loss.
If there's an oral drug where you only lose like 20,
yeah,
that would be pretty good.
Are you talking for yourself?
No. Coming up in the next hour, University of Michigan's Joanne Shu on the latest consumer sentiment print. This is Bloomberg.
DraftKings hit a milestone in the second quarter of 2024. For the first time as a public company, it turned a profit.
Is this a new era for DraftKings?
There's an inflection from when you're cash flow negative and you're operating off of equity raises from the past to when you're self-funded and you're cash flow positive and able to control your destiny a lot more.
You've had your first quarters of profitability now. Does that take pressure off? Does it increase pressure?
I think it increases pressure. I mean, once you start making profits, people expect you to make more, and all of a sudden you're valued on a multiple of those profits as opposed to the theoretical what could be. So very important, I think.
When you're cash flow negative, you've sold a vision of what the company should be working on, and you're very focused on working on that and delivering against that. When you've pivoted to profitability, the world of what you can work on is a little bit open, and there's a lot of different ideas, and it requires more focus than ever to make sure that you are prioritizing on the most important things that are going to deliver the most value.
DraftKings' solid standing in a booming sector gives them the luxury to play the long game. They're not under pressure to cut costs.
When you have really strong revenue growth, you don't need that. If you look at where we are today and where we want to be and where we believe we will be, the vast majority of the incremental EBITDA is not coming from any cost reduction. It's coming from increased revenue.
We don't feel like we need to cut costs because we're growing our revenue so much. We want to grow our revenue into our existing cost structure, and there's no need to reduce the cost as long as we're being efficient with what we allow our cost growth to look like.
Bloomberg brings you breaking news 24 hours a day. Powered by more than 3,000 journalists and analysts in more than 100 bureaus across the globe. Bloomberg Television. Context changes everything. Earnings season is here.
I know it's like your Super Bowl, right?
I can't wait. It's like opening presents in the morning.
All right, it will be exciting.
Nobody covers earnings like Bloomberg. This is Bloomberg Intelligence with Alex Steele and Paul Sweeney.
The real outperformance has been in U.S. corporate high yield.
Are the companies lean enough? Have they trimmed all the fat?
The semiconductor business is a really cyclical business.
Breaking market headlines and corporate news from across the globe.
Do investors like the M&A that we've seen?
These are two big-time blue-chip companies.
The window between the peak and cut changing super fast.
Bloomberg Intelligence with Alex Steele and Paul Sweeney on Bloomberg Radio.
Welcome to Bloomberg Intelligence. This is Paul Sweeney. He's run off for a few minutes, but he will be back. I'm Isabel Lee, and I'm filling in for Alex Steele. We're going to have an exciting Friday ahead of us. But first, let's check in with markets. We have John Tucker.
And we have data, because we are data dependent, Isabel. University of Michigan, the one-year inflation expectations, 7.3%. That's kind of a wow statistic. The expectation from Bloomberg's economists surveyed by Bloomberg for 6.5%. The 5 to 10-year inflation expectation coming in at 4.6%. Again, the expectation there was for 4.4%. Right now, out of the gate, the S&P 500, 3 points higher at 5920. The Dow Jones Industrial Average 6 points higher at 42,331, and the Nasdaq 100 right now 4 points higher. Of course, the big deal news the morning. Charter Communications combining with Cox Communications, and the proposed transaction values Cox at an enterprise value of about $34.5 billion. A bit of a shocker this morning. Novo Nordisk replacing the Chief Executive Officer Lars Jorgensen. This follows a 53% decline in its share price over the past 12 months. I'm John Tucker. That's your market update. Isabel and Paul.
All right, John Tucker, thank you so much. We appreciate that. Isabel Lee sitting in for Alex Steele. I'm Paul Sweeney. We're live here in our Bloomberg Interactive Brokers studio. Let's go to Governor Murphy. He's in Aberdeen, New Jersey. Been there. Nice place to be. He's talking about this rail strike that is in its first day. Let's take a listen right now.
Into New Jersey's first rail strike in decades.
You guys,
and I want to make sure we get one thing straight up front. It did not have to come to this. Here with me this morning, as he was last night, is the outstanding president and CEO of NJ Transit, Chris Calori. He and his team, many of whom are here with us this morning, along with our entire administration, again, many of them represented this morning, have been working around the clock, frankly, for months to avoid the strike. And now they are continuing to work around the clock to rearrange our state's entire transportation system so it can, to the best of our abilities, meet the needs of New Jerseyans. And I will ask Chris to elaborate on those details in just a few minutes. At this moment, our single highest priority, in addition to making the system work, just as it has been for the past several months, is reaching a fair and affordable deal as soon as humanly possible. A deal that provides NJ Transit's employees, including our locomotive engineers, the wages and benefits they deserve, without being forced to raise costs on riders, commuters, and taxpayers. As I said last night, here in New Jersey, we are proud to be the quintessential organized labor state. As Chris will attest to, 14 of the 15 unions with which NJ Transit engages are in complete harmony. NJ Transit's employees are the backbone of our public transit system. But the workers who depend on NJ Transit are the backbone of our entire economy. They deserve a public transit system that is reliable and affordable, period. So in our efforts to balance fairness on the one hand with affordability on the other, back in March, Chris and the Blitz representatives shook hands on a contract that would pay engineers roughly the same hourly wage, literally give or take 10 cents per hour as engineers with the Long Island Railroad. In other words, it would have given their members almost exactly what they have asked for, being paid the same wage as engineers at other transit systems in our region. And crucially, that contract would have provided our engineers their hard-earned raises without blowing up NJ Transit's budget. At the time, Blitz General Chairman Thomas Haas called the contract that was agreed upon, and I quote him, fair and fiscally responsible, end of quote. But now, just a couple of months later, a small handful of locomotive engineers have walked off the job and shut down our entire transit system. I think Chris will correct me if I've got the math wrong, that we're talking just under 400 engineers in a total workforce of about 12,000. It is frankly a mess of their own making, and it is a slap in the face of every commuter and worker who relies on NJ Transit. But we're not here this morning to point fingers. We are here to demonstrate that our administration remains ready to get NJ Transit back to full speed and to provide the Blitz members their hard-earned raises. Of course, no deal under these circumstances, or probably any other, is ever going to be perfect. The fact is, mass transit systems across the country face a sobering fiscal reality, in part due to threats to federal funding, and those threats and those realities cannot be ignored. I mentioned last night SEPTA across the Delaware River threatening to cut services by 45%, and at the same time increase fares by 20%. That will not ever be the case here in New Jersey. And putting NJ Transit on stable fiscal footing, as we have worked relentlessly to do for the past now 7.5 years, requires tough calls and compromises from all of us: lawmakers, workers, employers, businesses, and especially our commuters and taxpayers. Witness last year's painful corporate transit fee. And I might add, that is in sharp contrast. We dealt within the four walls of New Jersey with a very challenging fiscal reality that, again, is not unique to New Jersey, but we're also not immune. As in contrast to the MTA's answer, which is to rip off New Jersey commuters going into Manhattan. We chose to solve that challenge within our four walls, and we will this one as well. But I, for one, refuse to pass the buck or increase taxes on hard-working New Jerseyans for the same or even more likely reduced service. That's not going to happen. That is untenable. And the truth is, we can deliver a fair contract to every New Jersey Transit employee without abandoning our hardworking neighbors. And let me be clear, this is also about reaching a solution that sets the next administration up for success. The contract being negotiated at this moment is about the long-term future of NJ Transit, well after I leave office. Literally a tiny fraction of any deal that we reach will impact our remaining 8 months. And the easy play for Chris and for me is to just cave, fold, and kick this thing down the road. And we're not doing that. So we're holding the line for the next governor and the next administration so they do not inherit a NJ Transit that is on the brink of fiscal collapse, but is in fact in a strong state of health. That is what it means to fix NJ Transit, leaving the agency in better shape in every respect, but especially in fiscal terms than when we entered office. I was asked last night if I still stuck by my statement, we'll fix NJ Transit if it kills me. And the fact of the matter is, I apologize, facts matter here. That's exactly what we've been doing for the past 7+ years, and especially over the past 5 or 6 months since Chris has been at the helm. The stance that we're taking to get a fair deal for our workers and not blow up NJ Transit's finances is exactly a central tenet in fixing NJ Transit. If you look at our on-time performance, I should have put an asterisk on my commitment, but for the fact of what Amtrak is up to. If you look at on-time performance over the past 16 months, especially on the recent months on the non-Amtrak lines, it's mid to high 90%. Even on the Amtrak lines, it is regularly in the mid to upper 80%. We mentioned last night, I think the board approved 250 new double-level, two-level rail cars this week. That brings the total to 400. We'll have an entirely new fleet when all of that comes into fruition. We'll have a new locomotive fleet. I think you guys approved the board 12 this week, 12 new locomotives. We've got new train stations at Lyndhurst, Elizabeth. The Portal North Bridge is nearing completion. Many other stations. The facts, I apologize, let's not let the facts get in the way. We've had bumps in the road. Last summer, particularly last June, was unacceptable. This is a bump in the road. Chris will walk you through how we're dealing with it. But the trajectory is undeniable. And again, I wish Amtrak could punch at their weight, and the trajectory would be even more compelling. So back to today, what the people of New Jersey need right now is for the members of the BLET to step up and meet their obligations to the public. Let's end this strike, as we just said to a couple of their good members a few minutes ago. Our doors are open. We are ready to restart negotiations literally this second. But we need the BLET to come back to the negotiating table in good faith. Our doors are open. They will remain open. I thank you for coming out on short notice. And with that, please help me welcome the president and CEO of NJ Transit, Chris Calori. Chris?
All right, that was New Jersey Governor Phil Murphy at the Aberdeen, New Jersey train station talking about this day one of the strike between the New Jersey Transit engineers union and the railroad, which is displacing a lot of folks here today, including myself, trying to figure out how to get back and forth to work every day. But let's get right to some reporting on the ground. Monica Ricks joins us here. She's a Bloomberg News reporter. She's at Penn Station. Monica, what's the latest news coming out of this? We just heard the governor here saying we need to get back to the negotiating table. What are you hearing there?
Well, the governor says that they're ready to negotiate, but according to the union, they're waiting for a call from NJ Transit. So I think that they're ready to negotiate as well and get these contract talks underway again. 95% of the contract issues that they had have been hammered out, but they just are stuck on pay. And what these workers are saying is that they just want fair pay, because a lot of their competitors, Amtrak, PATH, they're making at least $10 more an hour. And the union president told me that if any of these carriers were hiring today or tomorrow, a lot of these workers would be going to them because they pay more.
How long do you see this playing out? Like, can they walk out for weeks or a couple of days?
Yeah, I mean, time will tell. This can go on, as long as these talks take to really iron out a deal. The last strike that happened was in 1983. That was more than 40 years ago, and that strike lasted about 34 days. There was an impending strike that could have happened in 2016, but that was averted. They hammered out a deal the night before, so it never happened. But, this could play out for weeks. They're hoping it doesn't come to that because these guys want to get back to work, and all of these commuters want to be able to take the train and not have to deal with any alternatives.
Is there any sense that there will be some mediator, whether it's, I don't know, the President Trump or some other federal government official that may come in and try to push this forward?
There were negotiators from the Biden administration that tried to fix these contract negotiations twice last year. There were federal mediators that both sides met with earlier this week, and still nothing was really ironed out. So I don't know what it's going to take at this point, but they are on strike right now, and all rail service is down. So maybe that'll push them to actually make a deal, because there's going to be a lot of commuters. They're going to have trouble getting to work, not just today, but Monday, and however long this takes to hammer out.
Monica, thank you so much for your reporting. Really appreciate it. Monica Ricks, Bloomberg News reporter. She is stationed at Penn Station in Midtown Manhattan. I'm sure there's a lot of frustrated commuters there. On the economic front, we got some University of Michigan sentiment data today, just coming out at 10 a.m. Wall Street time. Not good. University of Michigan sentiment came out at 50.8. Consensus was 53.4. Last period, it was 52.2. This is the second lowest rating or measurement on record. Joanne Shu joins us here, Surveys of Consumers Director at the University of Michigan. Joanne, put into context the numbers you guys reported today.
Essentially, we should think of this as very little change from April. Over the course of this year, we've seen consecutive months of very, very strong declines. This most recent one was a very small decline and essentially flat. But as you pointed out, this is a very, very low reading. Consumers continue to feel very dour about the economy. They're worried about the impact of tariffs on inflation and also the impact on unemployment. They're really worried about multiple dimensions of the economy. That was what they saw last month, and they continue to see dark times ahead.
And nearly 3/4 of the respondents spontaneously mentioned tariffs, and that topic crossed partisan lines. Can you tell us what you thought of that?
We've been seeing a rising share of consumers spontaneously mentioning tariffs. A few months ago, it was really a fairly small number of people, and now it's almost 3/4. It's cutting across partisan lines. It's really on everyone's minds. And at this point, consumers are really waiting for the other shoe to drop in terms of its impact on inflation. And it's not just the fact that tariff policies have come in pretty high, but it's also the uncertainty and instability of it. So following this most recent pause on some China tariffs, we saw a little bit of improvement, but it really wasn't enough to reverse the sour readings that we've been seeing for the last few months.
University of Michigan one-year inflation outlook, the consensus was 6.5%, which is an elevated number. It came in even higher than that at 7.3%. What's driving that?
Again, it's the uncertainty and instability of tariff policy. Consumers are aware that inflation right now isn't necessarily reflecting those tariffs yet, but they're waiting. They're really bracing for the impact. And interestingly, the increases in both short and long run inflation expectations were very much being driven by increases among Republicans. So even those who might broadly be in agreement with the president's economic policies are quite worried that the outlook for inflation has worsened recently.
Joanne, thank you so much for that. Joanne Shu, Surveys of Consumers Director at the University of Michigan. Again, some significantly weaker than expected outlook from the UMich survey, so we'll stay on top of that, of course. Market Drivers today is brought to you by Commonwealth. Join over 2,000 independent financial advisors who are taking control of their growth with advisor-centric support and future-ready technologies. Grow in your own terms with a partner dedicated to your success. Go to commonwealth.com to learn how. Isabel Lee sitting in for Alex Steele. I'm Paul Sweeney here. We're going to have more coming up for you. Anne-Marie Horder, Bloomberg Surveillance co-host on Trump's Mideast trip. And Marky Patel, Senior Portfolio Manager at Allspring Global Investments, will get her call on this market. S&P is up 9 points. The Dow's up 29. The Nasdaq's up 43 points. This is Bloomberg. Good morning.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. This is being brought to you by Oracle. Attention growing businesses, Oracle is offering to cut your current cloud bill in half if you move to Oracle Cloud Infrastructure. This is for new U.S. customers with minimum financial commitments. See if your company qualifies at oracle.com/Bloomberg. Right now, the major averages, they are slightly higher. The S&P 500, 10 points higher. Right now, 59.26 on the index. The Dow Jones Industrial Average is 39 points higher right now. That's up about 0.1%. And the tech-heavy NASDAQ 100, 22 points higher. That is up 0.1%. Consumer sentiment falling to the second lowest level on record. And in addition to that, from the University of Michigan, the figures that we got at the top of the hour, the inflation expectations, that was a bit of an eye-popper too, climbing to multi-decade highs. And you can blame a concern about the tariffs. And, of course, the big deal of the morning, Charter Communications combining with Cox Communications. Shares of Charter right now, they are up 1.6%. Novo Nordisk replacing its CEO. It follows a 53% decline in the share price over the past 12 months. Also, we did have other deal news. Vistra buying the natural gas assets from Lotus. The price tag there, $1.9 billion. This is trying to help fuel the demand for data centers. And I don't know if you saw this one. Sports news. San Francisco 49ers striking a deal to sell about 6% of the team. So values the team at a record-breaking $8 billion. Wow. It actually speaks volumes about the current state of sports investing as you have private equity money and tech wealth increasingly trying to elbow their way into the luxury suites.
Yep, it's a big trend, private equity coming into owning sports. There have been some rule changes, so that allows these folks to come in, which is a whole nother group of potential buyers.
That is a pretty rich valuation. Yep. Anyway, we check the markets for you all day long, right here on Bloomberg Radio. I'm John Tucker. That's your Bloomberg Business Flash. Isabel and Paul.
All right, John Tucker, thank you very much. We appreciate that. Isabel Lee, she's sitting in for Alex Steele, who's on assignment today. I'm Paul Sweeney. We're live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube as well. Again, we've got this market. If you look at the S&P 500, almost gaining back, well, year to date, it's flat, and we've gained back almost all we've lost from the peak there. So quite the round trip there. Margie Patel joins us. She's a senior portfolio manager at Allspring Global Investments. Hey, Margie, what do you make of this bounce back in the stock market here? It seems like, I don't know, a little premature, a little overdone, because we still have a lot of uncertainty out there as it relates to tariffs and impacts on the economy. Again, we got the weak University of Michigan data today. What do you make of it?
Well, I think it shows really the earnings powers of companies. The early numbers for the first quarter looked like the GDP was basically flat or a little negative. And in spite of this, earnings this quarter looked like they were about 10% up. So it shows that companies can still increase their profits, even with the backdrop of very flattish GDP. And I think it says with the market about sort of unchanged year to date, even though we had this earnings increase of about 10%, it shows there's been a little bit of deflation in price earnings ratio, making stocks a little bit more attractive today than, say, they were at the beginning of the quarter. So I think more of the same. I think the market's going to continue to surprise on the upside over the rest of the year.
That's interesting because we've round trip back to January market levels, but EPS is lower by around 6%, and we have a lot of Wall Street strategists really sounding more and more pessimistic. What gives you the optimism that we will see more upside?
Well, I think the most important thing is there was a lot of sentiment, especially last year, up till, say, a month ago, about the likelihood of a recession. People have backed off that. But really, when you look at what causes recessions, all our recessions basically have been caused by the Fed, where they slam on the brakes, pull out liquidity, raise short-term rates. We just completed the upcycle of that. And when you look at the Fed now, the last thing they're going to be doing is starting on a multi-month upswing in interest rates and tightening credit. So as long as the Fed is neutral, where they're looking at maybe cutting rates a quarter point or raising rates or more or less doing nothing, that's a very positive backdrop for stocks. I think that's the most important thing why we won't have a recession is the Fed isn't squeezing liquidity to precipitate a recession. So I think corporate profits are going to chug along, maybe more modestly than last year, but still pretty good and better than risk-free alternatives for sure.
What do you feel about tech stocks here, Margie? I mean, for a market to move one way or the other with any conviction, it seems like technology needs to be the leader. Do you think tech can lead this market higher?
Yeah, I think it will be simply because there's more organic growth potential in the tech sector than really any other sector. And a number of those names that are very high growers actually had that PE compression that I mentioned. So the stocks are actually priced a little more cheaply for their growth rate. And I think what you're seeing so far this year is maybe a little bit of striation between those companies in the tech space that have a more sure path of higher profitability and those that may have a roadblock or may have a deceleration. So I think it'll be a little harder to make tech profits over the rest of the year than it was last year when basically everything went up, but still a good sector.
Which sectors are you steering clear from?
Well, I think tech is going to be a very good sector. Again, maybe not as good as last year. And I think many of the industrial companies are going to surprise on the upside. I think many people still aren't convinced that industrial companies can have above average earnings growth, but I think we'll see that, especially those connected to increasing and improving the reliability of the electrical grid. Also, I think we will see the benefit of more capital expenditures here in this country. And also the data centers. That's been a pretty frothy area, but I still think that'll be a source of a lot of growth for industrial companies. So we think those two sectors will do particularly well. And we think energy sector, although it's a volatile sector, we think those names related to gas will continue to have secular growth either through LNG, liquefied natural gas exports, or through the need for basic load electrical power fired by gas. So we think those are going to be above average sectors this year.
Margie, thank you so much for joining us. Always appreciate getting a few minutes of your time. Margie Patel, she's a senior portfolio manager, Allspring Global Investments, joining us from Boston via Zoom. Let's go over to the Middle East. Anne-Marie Hordern is there. She's been reporting with the president all week through his Mid-East trip, and she is there as well. So, Anne-Marie, quite the trip for the president and his team in terms of economic development. Lots of newsworthy items in terms of economic deals were announced this week. What's the hindsight from you as it relates to his trip in the Middle East?
Yeah, a ton of deals, and every single stop the president had on this Middle East tour, from Riyadh to Doha to Abu Dhabi. And we should just talk about the last 24 hours, the latest of those deals. This all started in March. I reported about Sheikh Khaldun coming to Washington, having this meeting with the president in the Oval Office, talking about how they would like to invest $1.4 trillion over the next decade, especially when it comes to AI, advanced semiconductors, chips. They wanted to get their hands on in order to build out data centers here in the UAE. And we saw that yesterday, really this remarkable photo, if you will. Jensen Huang, the NVIDIA CEO, has been on every single stop of the president's trip. And what we saw yesterday was him standing in the middle of President Trump and Sheikh Mohammed bin Zayed as the Commerce Secretary, Howard Lutnick, signed this AI partnership between Abu Dhabi and the United States. It calls for the biggest data center outside of the United States to be built here in Abu Dhabi. And of course, to do that, they need access to those advanced chips. There's been a lot of talk about the national security concerns about that, especially behind the scenes. We have reporting that even administration officials in the Trump world, senior officials, are concerned about the guardrails to set this up. So for me, I think leaving this trip, what I'm going to be looking out for after this is what is the mechanism they do put in place to make sure that technology, that advanced high-tech technology from the United States, does not get into the hands of Beijing. And how it's been described to me is that those data centers will either be in, say, one in Abu Dhabi, there's going to be one likely as well in Riyadh, and they will control the access, but the U.S. will basically have veto power on who gets that control, because for the United States, it is paramount that they make sure that China does not have any access at all to advanced technology.
We also saw the first direct talks between Russia and Ukraine in over 3 years. Talk to us about the takeaways from there, and how was that received by world leaders?
Well, the president, according to Volodymyr Zelensky, had a call with European leaders like Emmanuel Macron, Friedrich Merz, the Polish president as well, about their meeting with Zelensky and European leaders. And all of this, of course, is about whether or not we are going to see some sort of meeting between President Putin and President Trump. Throughout this entire trip, Trump continued to leave the door open to potentially adding another leg of the trip and going to Istanbul, only really willing to do that if he was going to see President Putin. He most recently saw President Zelensky at the Vatican, if you remember that remarkable photo of the two sitting in the Vatican face to face. The president, before he left, said he may have a call with Putin, so I think that would be the next step between this relationship and whether or not they are able to sit down and find some sort of agreement, at least for the near future, to have a cessation of hostilities, to have a ceasefire between those two countries. So from the U.S. perspective, they were willing to have this meeting. The president seemed very clear about that, even last night, saying destination unknown, but likely going back to Washington, D.C. at this point. And he obviously left Abu Dhabi, and he's heading back to Washington. And as you guys know, in Washington, a lot of headaches await him as he tries to get his big, beautiful bill through Congress.
Anne-Marie, Iran, always in the background there. Do we learn anything about how the president may want to approach Iran going forward?
Well, the president told reporters on Air Force One that there has been a proposal delivered to the Iranians. This would have been delivered via Steve Witkoff, his envoy, who already had 4 rounds of meetings with the Iranians brokered by the Omanis. Of course, the issue is we don't exactly know what was in that proposal. The president has made very clear on this trip, speaking about Iran, that Iran cannot have a nuclear weapon. Where it's going to get challenging for Iran and the administration is whether or not Iran can have low-grade enrichment of uranium to have a civil program. Now, there was an NBC News report, and the president said you might have saw an NBC News report where Iran basically outlined their proposal. This report is exactly what the president, almost to the day 7 years ago, withdrew the United States from, and that's the JCPOA. So what this top advisor to the Ayatollah told NBC News that what Iran is willing to do is say we're not going to have access, we will not may have a nuclear weapon, but we will keep the enrichment of uranium from a civil perspective. To have a civil program, and that is something that I think would be very challenging for this administration to accept, given the fact that Trump has went out of his way to bash the JCPOA and also pull the United States out of that agreement.
Anne-Marie, thank you so much for joining us. Appreciate your reporting, as always. Anne-Marie Horton, she's a co-anchor of Bloomberg Surveillance, joining us from Abu Dhabi. Hopefully she'll be making her way back home soon, because she's been all over the Middle East with the president as he's made this trip. And again, as Anne-Marie was just reporting, a flurry of economic announcements and investment opportunities. So we'll see how that plays out going forward, but certainly a beneficial trip for many companies that want to do business in that part of the world. S&P 500 pretty much unchanged on the day. The Dow's up about 7 points, and the Nasdaq's down 7 points. So that's about as quiet as you can get at the index level. And we see that in the VIX. The VIX is below 18 after being much higher recently. 10-year Treasury yield comes in about a basis point. We're at 4.42%. Coming up, we're going to talk about Novo Nordisk. The CEO stepped down. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. Right now, the major stock averages mixed to little change, and we're also looking at the volumes that are about 13% below the average for this time of day for the S&P 500. Measure of consumer confidence in America's economy tanking this month, so that's kind of weighing on sentiment. This is the University of Michigan reporting the nationwide consumer sentiment index dropping to the second lowest in record as tariffs rattle the economy. Also, part of that report, the inflation expectations rising to multi-decade highs. Right now, the S&P 500 unchanged at 5915. The Dow Jones Industrial Average just 8 points higher. The Nasdaq 100 right now 46 points lower. That is down 0.2%. And of course, the big deal news of the day: Charter Communications combining with Cox Communications, cash and stock deal uniting two of the biggest U.S. cable providers. Right now, you have shares of Charter Communications up 1.6%. Applied Materials, this is the largest maker of chip manufacturing equipment in the U.S., they delivered a pretty lackluster forecast for the current period. It highlights the potential cost of the trade dispute with China. And mortgage rates, sorry, Paul, mortgage rates have increased for the first time in 4 weeks. Right. This, according to Freddie Mac, the average for a 30-year fixed, 6.81%, 3.25%. For somebody in the room.
2.75%.
Yeah, that ain't bad. I kiss my mortgage every night. High mortgage rates weighing on would-be home buyers, obviously. We check the markets for you all day long, right here on Bloomberg Radio. I'm John Tucker. That's your Bloomberg Business Flash. Have a great weekend.
You too, John. Absolutely enjoy the weekend. I got my 6% mortgage. I felt like a total putz. Now I'm like, I don't think we've been back to 6% since then. So I don't know.
I don't know how the kids are going to do it.
You're talking to a renter, so hopeless is how I feel.
Exactly. All right. John Tucker, thank you so much. We appreciate that. Isabel Lee sitting in for Alex Steele. I'm Paul Sweeney, live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube as well. Some news coming out of the pharmaceutical space. Novo Nordisk is replacing its CEO amid increasing competitions for its Wegovy obesity shots and a 53% decline in its share price over the past 12 months. Boy, these stocks are having a tough time. They did so well during the pandemic, and everybody's trying to adjust post-pandemic, it seems like. I'm thinking about United Healthcare as well. Mikey Shaw joins us. He's a senior pharma and biotech analyst for Bloomberg Intelligence. He's in London. He's one of our really, really good analysts over there in London, one of the best in the city covered in this space. He learned from an old guy, but he's the young guy. All right, Mikey Shaw, tell us what's going on at Novo. Is it the CEO's problem, or do they have a bigger issue?
Yeah, I mean, they announced the decision today. Certainly unexpected by us. Seems a bit, abrupt in nature. Novo tends to be very steady in their approach, but they also take, a long-term approach to things. So maybe they think, Jorgensen can't kind of steer the ship in light of the challenges that they're facing and that they're due to face as well. As I said, there's been a bit of a turn in fortune since mid-24. Some of that's been market challenges. Some of that's been kind of pipeline execution. In terms of the market challenges, I mean, it's difficult to know kind of what the CEOs, how they were meant to kind of react to that. So, you saw U.S. policy pressures, and then you also saw headwinds from GLP-1 compounding. Due to supply shortage, and then on the pipeline side of things, you had underwhelming results for CagriSema, and then you also, we also had kind of reservations around Novo's oral obesity strategy. So that was heavily focused on peptides. They've done a series of deals recently which are now focused on oral small molecules. So that suggests that perhaps not investing sooner in that space was perhaps an oversight. And I think, the move today or the decision today, really reaffirms kind of perceptions that, while Novo had the first mover advantage in obesity, they certainly have lost ground to Eli Lilly now, which looks like it has the stronger obesity offering out of the two players.
What's interesting to me is how he will continue as CEO for a period to support a smooth transition to a new leadership. Quote, I mean, Novo has only had 3 CEOs. How will this affect sentiment? I mean, are people more optimistic and reinvigorated that, yes, maybe we can finally have a turning point? Or are they, you think, feeling a little bit more pessimistic because it sounds like they really have a good culture?
Yeah, I mean, that's the thing, right? Yeah, I said that the timing seemed a bit odd. Novo is obviously, you're expecting an uptick in GLP-1 in the second half of the year as you see easing headwinds from compounding. So, you know, I think the timing's a bit weird. The last time they changed their CEO, they announced a successor at the same time. That was Jorgensen, so the switch between Sorensen and Jorgensen. You know, today, you know, they're basically just saying that they're reviewing internal and external candidates, but the strategy remains unchanged. The fact that they say the strategy remains unchanged makes us believe that, you know, it's clearly an execution issue, and that, you know, the board and the major shareholder, which is Novo Foundation through Novo Holdings, have clearly kind of lost confidence in Jorgensen.
So talk to us about the just kind of what we're seeing in the weight loss drug market generally. Where are we in its development? And how's it kind of shaking out in terms of leaders in that marketplace?
Yeah, so I think I think Lilly now is, you know, the clear leader. It's got the better portfolio. It's got a more effective drug out there. What's going to be key going forward now is there's going to be a lot of focus on oral GLP-1s. So these fall into 2 categories. One, peptide, which is a large molecule, and then you've got the small molecule such as orforglipron. You know, we think that orforglipron, which is Lilly's asset, that's clearly got the better profile when comparing that to Novo Nordisk oral semaglutide. That's in part because, one, it's probably easier to scale because of the type of molecule that it is. And 2, you don't have these kind of strict dosing criteria where you have to take it on an empty stomach, etc., which, you know, we think is a drawback to convenience. Now, you know, we've seen kind of the difficulties in kind of scaling up injectable GLP-1s. We don't envisage, you know, the same issue with oral small molecule GLP-1s. So that would essentially, you know, allow kind of, you know, greater penetration of the obesity market.
The competition has definitely intensified, and Novo stock has more than halved in the past year. What about Trump's pharma tariffs? That looms over the company as well.
Yeah, I think it looms over Novo, and I think it looms over, you know, drug companies as a whole. You know, clearly negative, but also, you know, a source of volatility. There's no real detail on it. So, you know, it's difficult to kind of comment on, you know, the potential impact that these tariffs could have and when they're going to come in. And, you know, that's kind of commentary that we kind of heard over large pharma's 1Q results too.
All right, Mikey, thank you so much for joining us. Mikey Shah, he covers all the pharmaceutical companies for Bloomberg Intelligence over in London. We hired Mikey when he was a young associate. He did really well there. We promoted him to analyst. Did really well there. Got promoted to senior analyst. Now he's one of the senior folks in the city of London covering these big pharma companies. And it's just a great success story. And that's what Bloomberg Intelligence has had a lot of success with, which is identifying and nurturing young talent. And Mikey Shaw is certainly one of those there. And that's a great thing to see. Red headline crossing the terminal. Boeing near deal to avoid prosecution in crashes case. That's according to Reuters. So that's another piece of good news for Reuters and for a company that couldn't find a break for the longest time, the last several years, in terms of all the various safety issues they had and the government investigations. They've now had a pretty good week. The stock's off 1% today, but it's up 15% year to date. And when we call earlier in the week, they got the biggest deal ever.
Yes, that was good news for them.
Coming out of the Middle East with a huge plane order. So again, maybe things are turning around for our good friends at Boeing. So we'll have continued reporting on that story. Boeing near a deal to avoid prosecution in crashes case. That's again, quoting to Reuters. Stocks at $204, down 1% today, but up 15% year to date. S&P 500 unched. Dow, same. NASDAQ, it's off 1/10 of 1%. So a pretty calm day in terms of the index level movements there. Bitcoin calling it out for Tom on the Upper East Side at $103,000 per token. That's a nice move. This is Bloomberg.
listening to Bloomberg Intelligence with Paul Sweeney and Alex Steele on Bloomberg Radio.
All right, Isabel Lee sitting in for Alex Steele today. I'm Paul Sweeney. We're live here in our Bloomberg Interactive Broker Studio, and we are streaming live on YouTube. I wonder if you can remember, Isabel, a time before tariff discussions, all this market wanted to talk about was AI. Who are the winners and losers? How much money are you going to spend on AI? Is it going to be revolutionary? And what's it going to mean for the technology space? And every other company was talking about AI and how it's going to impact their business. And that includes Microsoft. They invested $13.75 billion in OpenAI. It committed to spending $80 billion on AI data centers in this year alone. But then DeepSeek came along, kind of changed the game. So let's get an update there. Austin Carr he joins us here from Bloomberg News. He's the author of the Big Take story in Bloomberg Business Week. Microsoft CEO on how AI will make every company, including his own. Austin, you're looking at AI through the lens of Microsoft, and that's a good place to start because they've been one of the leaders here. What did you learn?
Well, the big thing that we learned is that Microsoft is not as dependent on OpenAI as everyone seems to think. That is actually just one of the many bets that Satya Nadella, the CEO of Microsoft, has laid down on the AI industry. And what we are sort of depicting in the story is how, it's not just that they make money through ChatGPT and renting out OpenAI models, but they rent out a lot of AI models for a number of different companies, whether that's Meta or more recently DeepSeek. And it just shows that they are sort of diversifying their dependence on OpenAI to make as much money as possible through cloud computing, through their own ChatGPT competitor called Copilot as well.
How does Copilot indeed stack up with OpenAI's ChatGPT? In your chart, it ranks under Perplexity in terms of global market share. Is there some sort of conflict of interest, so to speak?
Well, actually, what they're doing is they're sort of putting Copilot into every one of their products. So GitHub, for example, has GitHub Copilot, which is a wildly popular AI coding assistant. You also have Copilot for Windows, for Microsoft Word, Excel, for SharePoint, for Teams. So they're sort of leading on their enterprise reach to really build up Copilot and make it a popular sort of embedded version of ChatGPT within their own apps. But at the same time, although Copilot relies on OpenAI's model, they're also increasingly depending on third-party models as well as their own internal ones. This is something they're testing out using an invisible model picker. So anytime you input a query to Copilot, it might use OpenAI's models, it might use Microsoft's models, and it's just sort of diversifying that approach to go whichever one is the most efficient model. Now, is it a conflict of interest? I wouldn't say so. I mean, this is actually just smart strategic thinking by Satya Nadella to not, again, be so dependent on ChatGPT, on OpenAI. And they're just trying to show the world that they're going to make money again on revenue share with ChatGPT, on renting access to the OpenAI models, but also through their own internal models as well. And if ChatGPT wants to compete, that's only going to increase the equity value that Microsoft has in OpenAI.
Austin, what does Microsoft think about, and what did they think about, and what are they thinking about DeepSeek these days? Friend, foe, huge threat? What do you say?
I mean, I think it does land in and really highlight that frenemy relationship with OpenAI. We have this scene that opens the story when Satya Nadella is in Davos. He first learns about DeepSeek, and he told us his initial reaction was, "Holy moly, this is really one of the most efficient models that we've seen out there. It can do a lot of the same computing as OpenAI's GPT-4 can, but at a fraction of the cost. And now it's not as intelligent. Maybe there's some other risks involved with relying on a Chinese model, but what you did see is Satya Nadella over that weekend telling his team to get it out on our cloud using this sort of AI marketplace that they have where you can rent access to OpenAI's model, Meta's models, and DeepSeek's. And so what they're looking to do is actually head more in a DeepSeek-like direction. We want to go from a time when it costs hundreds of millions of dollars to train models to making them a lot cheaper, not just to train, but also for consumers to use. And that's the big thing that Microsoft is focusing on now. It's called the Pareto Frontier. It's taking the most advanced cutting-edge mechanisms for AI now and then redoing them in a way that's very cost-efficient. That's his main focus right now, cost efficiency, making these things super productive without breaking the bank.
Talk to us more about Satya Nadella's favorite economic theories, Jevons paradox, which I think everyone started to talk about a few months ago. How does he believe that this will be similar to the AI phenomenon?
you know, I didn't think we'd be talking about 1860s coal production in 2025, but that's really what he's been talking a lot like a macroeconomist these days, and perhaps that's a necessity when your company is worth $3 trillion. But Jevons paradox is this idea that back in the day when the steam engine came along, suddenly it took a lot less coal to make the steam engine work. And you would think, oh, well, if we need less coal, that would actually mean coal spending goes down. But it actually led to an explosion of coal consumption. And it happened more recently with plane travel. You know, planes used to be super expensive, then operational efficiencies brought down the costs. You'd think that would be bad for airlines, but it actually led to an explosion of consumption because people could fly more. There was new airline routes. And so that's what Satya is hoping happens with AI, where you see costs of AI go down. He thinks that'll lead to an explosion of AI consumption through a lot more use cases for AI, a lot more companies adopting these tools because they will be far less expensive. And because, you know, Microsoft is essentially one of the largest coal miners out there, he hopes to make a lot of money from that coal production.
Austin Carr, thank you so much. We appreciate that. Austin Carr is technology reporter for Bloomberg News up there in Boston, Massachusetts. You can read more of this story on the Bloomberg and at Bloomberg.com/bigtake. All right, for our listeners in the U.S., a reminder, you can listen to us via satellite radio on Sirius XM Channel 121. Access the world's only global audio business network, coast to coast, 24 hours a day. Bloomberg Radio on Sirius XM Channel 121 is presented by Oracle. Stay tuned for the latest market news and industry research. The next hour of Bloomberg Intelligence starts right now. S&P 500 up 2, the Dow's up 22. The NASDAQ is down 11. The VIX below 18. We'll have more coming up. Bloomberg Intelligence starts right now.
This is Bloomberg Intelligence with Alex Steele and Paul Sweeney.
The real outperformance has been in U.S. corporate high yield.
Are the companies lean enough? Have they trimmed all the fat?
The semiconductor business is a really cyclical business.
Breaking market headlines and corporate news from across the globe.
Do investors like the M&A that we've seen?
These are two big-time blue-chip companies.
The window between the peak and cut changing super fast.
Bloomberg Intelligence with Alex Steele and Paul Sweeney on Bloomberg Radio.
All right, coming up in this hour, we'll check in once again with Anne-Marie Hordern. She is over in Abu Dhabi. She's been with the president all week. Got the latest reporting from the president's trip to the Middle East. Big M&A trade in the cable TV business today. Geetha Ranganathan, Bloomberg's media analyst, Bloomberg Intelligence media analyst, will join us to break down that deal. It's Friday, so we do a couple of things on Fridays. We talk municipal bonds today with Eric Kazaski from Bloomberg Intelligence. And also on Friday, we check in with Barry Ritholtz, founder of Ritholtz Wealth Management, see what he's thinking about these markets today. Always an interesting conversation with Barry. Right now, let's kick off this hour. We could do that with Charlie Pellet.
Hi, thank you very much, Paul Sweeney, and here's what's going on. We've got the Dow, the S&P, NASDAQ all higher for now. Following a 4-day advance, though, the S&P 500 index has been fluctuating. Investors certainly not getting much encouragement from this morning's economic data. Right now, the S&P higher by 4. That is a gain of just about 0.1%. The Dow up 38, higher by 0.1%. NASDAQ in the red now, swinging between gains and losses here. Right now, we've got NASDAQ, we'll call it unchanged on the day. The NASDAQ 100 index down by under 0.1%. Your 10-year 4.43%, 4.43 to be clear on the 10-year. The 2-year 3.97%. Gold down 2%, 31.74 the ounce, and West Texas Intermediate crude up 1%, 62.20 for a barrel of WTI. Consumer sentiment fell to the second lowest level on record, with the preliminary May sentiment, as measured by the University of Michigan, declining to 50.8 from 52.2 a month earlier. Joanne Chu is director of surveys at the University of Michigan. She was a guest right here on Bloomberg Intelligence.
This is a very, very low reading. Consumers continue to feel very dour about the economy. They're worried about the impact of tariffs on inflation and also the impact on unemployment. They're really worried about multiple dimensions of the economy. That was what they saw last month, and they continue to see dark times ahead.
And just how bad was it? The May reading was lower than all but one estimate in a Bloomberg survey of economists. A massive corporate deal involving two of the biggest names in cable, Charter Communications has agreed to combine with closely held Cox Communications in a cash and stock deal that would unite two of the biggest American cable providers. For on-demand news 24 hours a day, subscribe to Bloomberg News now wherever you get your podcasts. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie Pellet, thank you so much. We appreciate that. Isabel Lee, she's sitting in for Alex Steele. I'm Paul Sweeney. We are live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube, as well as Charlie was just reporting. Not a lot of big movement at all in the index level. But let's take a look at some stocks on the move today. I'm Paul Sweeney, along with Isabel Lee, and we're joined by Bloomberg's Christine Aquino. Christine, what are you looking at today?
Well, Paul, I'm taking a look at some of the interesting 13F filing moves that we've seen. Of course, it's 13F filing season. So we're taking a look at what hedge funds have done in the first quarter. So catching some attention, actually, is NVIDIA, of course, because we did see in those filings that Michael Burry Scion Asset Management bought puts on NVIDIA ahead of Liberation Day. So that was in the first quarter. A little backward looking, but very interesting that that was what he was anticipating. And we are seeing NVIDIA down a little bit today, down 0.2%, down for a second straight day. Though more recently, though, we have been getting a slightly brighter outlook for that company and AI in general. NVIDIA on track for its best month in a year. And that's after President Donald Trump's trip to the Middle East, unlocking a bunch of deals. Remember that they're going to be reporting in the first week of June. So far, a lot of their biggest customers, first week of June.
Jeez.
Yeah, it's coming up.
Their counts are slow.
But we're all going to be waiting for it,
we are.
right?
Yes,
yeah,
we are.
Yeah. We're all going to be tuning in. They did get some good indications for earnings of some of their biggest customers, and just indicating that there's still a lot of interest in spending on AI infrastructure, which of course NVIDIA benefits from.
What about the world of makeup and skincare, Estee Lauder?
Oh, yes. That is another company that's catching some attention in light of these 13F filings. Again, Michael Burry Scion Asset Management doing the opposite for Estee Lauder and actually doubled its position in the company in the first quarter. So we're seeing those shares up now just slightly more than 1%. Year to date, though, that stock has dipped 15% in its earnings report earlier this month, implied a weaker than anticipated fourth quarter outlook, and the company forecasting it will return to sales growth only in 2026. Some bright spots ahead, though. Bloomberg Intelligence's Deborah Aitken did say that third quarter showed some patches of promise, led by share recovery in the U.S., China, and Japan.
Well, Alex Steele always tells me that you have to invest it in your face.
Yes, you do, Paul. Yes, you do. Have you heard
memo.
of advanced night repair? Estee Lauder, that's the thing.
You do love that.
That is their blockbuster product, Estee Lauder. So yeah, look, I'll send you a link.
All right, John Tucker and I, we missed that memo. All right, how about Boeing? Get another big news day for Boeing.
Big news day for Boeing. Indeed, we are getting a Reuters report saying that Boeing has reached a tentative non-prosecution agreement with the U.S. Justice Department. This pertains to their fraud case stemming from two fatal 737 MAX plane crashes. So essentially, that means that Boeing is no longer agreeing to plead guilty in this case. The DOJ officials are still considering whether they plan to proceed with the agreement or take Boeing to trial, but no final decision has been made, according to Reuters, and no comment from both the DOJ and Boeing.
I mean, that would be big news if that's in fact the case. I'm surprised the stock's not higher.
Yeah.
But the stock's been up 15% year to date, so maybe we've already priced in some good news. But they also had a good week in terms of the revenue line, getting that big order coming out of the Mideast that was announced earlier this week. I think the biggest order ever. So it feels like after 3 years or so of negative news, headwinds, that maybe things have turned for Boeing. And now you just got to get the production levels up. That's the big deal. Christine Aquino, thank you so much. We appreciate that. Christine Aquino, managing editor for Markets Live, joining us here on our Bloomberg studio. Anne-Marie Hordern's been doing yeoman's duty all week from the Middle East. She's still there. Anne-Marie Hordern, she is the Bloomberg Surveillance co-host. She is in Abu Dhabi. Anne-Marie, I mean, I would argue an extremely successful week for the president and his team in terms of drumming up business and making headlines. What's the feeling on the ground there?
I mean, the feeling on the ground in the Middle East is just one of giddiness. They're so excited about the president's trip. They enjoyed having him here. They rolled out the red carpet quite literally for the president. There's sword dances. You had camels. You had tons of fanfare for him, tours of palaces and mosques. And I really think one of the images that really shows how much the Gulf countries tried to make the president feel at home in the region was when Mohammed bin Salman, the crown prince of Saudi Arabia, drove him around in a golf cart, no less, to dinner on their final evening together. So they've really done everything they could to try to make the president feel at home, and they really owe the president for the fact that he is living up to the expectation they were hoping from this White House. It was a transformational speech if you consider some of the foreign policy initiatives the president set forward. And on top of that, he is really making it easier for these Gulf states, capitals, flush with capital, to do business with America.
We have Bloomberg reporting saying that some Trump officials are already weighing how to pause the deals over concerns of some security breaches. On headline level, these are all impressive, but what is your read on them and the feasibility that they will actually happen or see fruition?
Well, the devil's, of course, in the detail, especially when it comes to security concerns when it comes to China. The reporting I have, whether or not it's a data center in Saudi Arabia or in the UAE, which the U.S. and the UAE signed on to this partnership to build the biggest data center outside of the United States right here in the UAE in Abu Dhabi, is that there is concern amongst senior officials about the guardrails that will be set up to make sure that this technology does not get into the hands of China. How I understand it is that this will be set forth where the data centers will be here, and these individuals will control on the ground who has access to it, but the U.S. also has a say, and they have control as well over who has access to it, almost like a veto. And that is really critical in order for these countries to get the amount of advanced chips that they want in order to build out these AI data centers. They would need to make sure they are following the guardrails set forth by the U.S. Of course, these are top-line deals right now. So the next few weeks, months, and even years, this is going to be an ongoing discussions between Riyadh, Abu Dhabi, and Washington, because it's not just senior officials within the Trump administration, but there's bipartisan support within Washington to make sure that any technology that's leaving the shores of the United States does not get into the hands of Beijing.
Anne-Marie, the president is jetting back to D.C. Arguably, he's got a lot to do here. He's got a tax bill to get through and work with Congress. He's got to, I guess, provide much more clarity on his tariff policy. What do you think the to-do list is when he does get back?
Well, the president is already truthing, if you will, from Air Force One, and he told Republicans to stop talking and get to work. He wants to see his agenda pass. The issue is, of course, is that he has such a slim majority in the House of Representatives and in the Senate, and the factions of infighting is quite large at this moment. There's individuals who want to see parts of Joe Biden's IRA stick because some of those grants are helping their districts. There's individuals who want to make sure, and their red line is that Medicare is not cut. Then you have Republicans from New York State, California, high tax states that want to make sure there is a very high cap when it comes to the state and local tax deduction. Getting all of these individuals to sign up on one bill at the same time, making sure it's not too big where it doesn't start to bring in concerns of the bond market when it comes to the U.S. deficit is going to be incredibly challenging for this president. So that is going to be one headache that meets him when he lands in Washington, D.C. He talked a little bit about trade today. He said at some point we're not going to be able to negotiate all of these deals, so they're just going to set a new rate and let those countries know. So in the next few weeks, given the fact we're in this 90-day reprieve from April 2nd, when you had those very high rates from what they would call Liberation Day, we're going to potentially see new rates set for a number of countries. So a lot of headaches for the president when he gets back after this really fanfare, being treated like a king in the region. We should know one piece of joy for the president. He talks about with reporters the fact that he wants to get home because he has a new grandson waiting to meet him.
Good for him. Anne-Marie, thank you so much for all of your reporting this week. We really appreciate it. Excellent work. Hopefully you'll be coming home soon here. Anne-Marie Horder, folks, she is our co-anchor of Bloomberg Surveillance, and she joins us from Abu Dhabi. Great reporting. Big trade in the world of media and telecommunications. Charter Communications, that's a publicly traded company, buying Cox Communications, which is a privately held cable company. $34.5 billion is the value on Cox. This is a huge deal, folks, and we want to get the latest. So we turn to Geetha Ranganathan, Bloomberg Intelligence Senior Media Analyst. Geetha, big deal. What does this do for Charter here? What's the rationale for Charter laying out this big trade here?
Yeah, absolutely, Paul. I mean, yes, we were expecting something to happen in the cable space. Remember, Charter right now, before this deal, is the second largest U.S. broadband provider with about 30 million subscribers. With this deal, what happens is they really kind of they catapult to #1 position, edging past Comcast, and having almost 36 million broadband subscribers. And really the rationale for the deal, Paul, is that cable has been under intense pressure. So just a few years ago, cable completely dominated the broadband landscape with about a 67% market share. They have been losing share to the telecom players, the Verizons, the T-Mobiles, and the AT&Ts of the world, because those players have come out with a much cheaper broadband solution with what is known as 5G home internet or fixed wireless access, which is priced about 20 to 30% lower than a cable broadband product. They've also been ramping up their fiber rollout. So cable kind of really facing it on both ends of the spectrum in terms of competition. And this is really just about them kind of gaining scales and better efficiencies in operations.
So they've had talks about this more than a decade ago. And to many people's point, this really isn't a surprise. What changed in that horizon? Like, why was it not pushed through before, and why are we seeing it happen right now?
I mean, there have been multiple things. Regulatory concerns have obviously been, one of the foremost issues for the cable space. Remember, I think just less than 10 years ago in 2016, Comcast tried to buy Time Warner Cable, failed in that transaction, and then Charter went ahead and then acquired, Time Warner Cable. So regulatory issues have certainly been, front and center. And I think, right now, the stimulus for this was really the fact that the cable industry is kind of facing all of these challenges from the telecoms, intense competitive challenges. And I think Cox really saw this as a really good strategy for them to exit.
All right, so this begs the question, and you mentioned it earlier, what does Comcast do here? Is there a response here from Comcast? Is there a strategic response here?
So Comcast actually already has a deal kind of in the works in terms of their spinoff of their cable network. So that's on the media side of the business. That's not on the cable side of the business, but they are spinning off their cable networks. That should happen sometime a little bit later this year. And the expectation, Paul, has been that once that deal happens, once they spin off that cable networks division into its own entity, that will become a roll-up for many other networks, most notably, the Warner Brothers Discovery networks, maybe even, a smaller AMC networks. So really, there's been a lot more chatter for Comcast on the media side rather than the cable side, but we'll have to wait and watch.
When it comes to antitrust, do you think that it helps that Charter-Cox deal isn't a big tech company? Because we know that competition officials, even Vice President J.D. Vance, have really closely looked at that space.
Yeah, I think that definitely helps. Also, remember, this is, there is absolutely no overlap in terms of their footprint. Cable is a very regional business. So again, this does not in any way hamper competition. It's actually good for consumers. And the one thing that, the Charter executives kept mentioning on the call was, they are basically going to create more jobs in America. So this is, good overall. And so definitely, just kind of given the size and scope of the transaction, we don't really expect any big regulatory pushback.
All right, Geetha Ranganathan, thank you so much. We appreciate that. Geetha Ranganathan, she covers all the media companies for Bloomberg Intelligence. She's based in Princeton, New Jersey. Again, a big deal. Charter Communications, CHTR is the ticker, buying privately held Cox Communications for $21.9 billion equity value. There's also a lot of debt in there, so the enterprise value is much higher. Big transaction that the folks down in Atlanta, the Cox family, have been a long-time family company, owning a wide variety of media assets, newspapers like the Atlanta Constitution, radio stations, TV stations, cable, amongst other things. So this is a big, big transaction for them. They are getting out of the cable television business, and they're considered very, very smart operators. So that tells you how tough that business is, and when they're saying they cannot compete with their scale. So big transaction in that space. Stocks, not much happening out there. S&P 500 up 5 points. We'll have more coming up. This is Bloomberg.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
Yeah, it's 11:21 on Wall Street. We do check markets all day long here at Bloomberg. We have got the Dow higher, NASDAQ trading lower, S&P right in the middle, little change fluctuating. And this Bloomberg Business Flash is brought to you by Oracle. Attention growing businesses. Oracle is offering to cut your current cloud bill in half if you move to Oracle Cloud Infrastructure for new U.S. customers with minimum financial commitment. See if your company qualifies at oracle.com/Bloomberg. Following a 4-day advance, the S&P 500 index is fluctuating higher right now, though. Little changed, up 3 points, up under 0.1%. The Dow up 4, also little changed on the day. NASDAQ down 12, a drop there of just under 0.1%. The 10-year at 4.43%, with the 2-year 3.96%. Spot gold is trading lower, little right now down 1.9%, down $61 the ounce. West Texas Intermediate crude up 0.8%, $62.13 a barrel on WTI. There is that massive corporate deal involving two of the biggest names in cable, Charter Communications combining with closely held Cox Communications. Geetha Raghunathan is following the deal for Bloomberg. She was a guest moments ago right here on Bloomberg Intelligence.
With this deal, what happens is they really kind of they catapult to #1 position, edging past Comcast and having almost 36 million broadband subscribers.
Right now, we've got Charter Communications up by 1.6%. The other name, Cox, by the way, closely held. The other name, Comcast, it is down now, little change, down under 0.1%. Earnings last night, Applied Materials down now by 6.7%. Take-Two also reported last night, down by 1.7%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Now on Bloomberg Intelligence, Munis in Focus.
All right, today's Munis on Focus is brought to you by BAM Mutual. Put America's strength to work in your portfolio with BAM insured municipal bonds. Protect your investments with an added layer of security and guaranteed income. Invest with strength. Build a stronger tomorrow with BAM Mutual. Check in with Eric Kazaski, Senior Municipal Strategist for Bloomberg Intelligence. He's safely ensconced down there in Princeton, New Jersey. Eric, I feel like I can't start any discussion of municipal bonds without asking, can I still have my tax exemption, or is President Trump in this maybe new budget, will that be going away? What's the status there?
Yeah, if you asked the market 2 months ago, it probably would have been decidedly on the fear side of the equation that the exemption was going away. I think at this point, given what the House is proposing, we could sort of safely say that the exemption is going to be around, and you and I are going to be talking about munis for some time to come.
How will the adjustments to the SALT deduction cap really affect taxpayers in high states? I mean, I'm just thinking about the potential economic impacts, and it seems to be a huge windfall.
Yeah, I mean, when they lowered the cap to an unlimited basis to 10,000, right, what that did is it forced some buyers who were on the margin into munis because they were just looking for more ways to shield taxable income, especially in those states like California, New York, New Jersey, with, high in-state income taxes rates. Raising it to 30,000, on the margin, we think it's going to have negligible impact to our space. I think, what really could be a game changer is if they go back to sort of an unlimited basis with a phase out in income, because there have been a lot of people in the lower brackets who've gotten into munis via separately managed account platforms. So it could affect the demand we're seeing there.
All right. Eric, I mean, I love some of these rates that I see in your notes. Tax equivalent yields in California are 6.86% for 10 years. While New York at 6.44. Boy, as a salesman, I can sell that. I mean, are people rushing into the muni bond space?
Not as much as you would think. And look, it gets even better. If we look at the tax equivalent yield for, let's say, a single A revenue bond far out the curve, which has been performing the worst by far this year, right, the long end of the yield curve, you're approaching 9.5%. That's an easy sale for someone who has a high taxable income and wants to shield that from income taxes, right? Like you said, it's an easy call to make. And we're surprised that we're not seeing as much demand as you would think, given where taxable equivalent yields are. We think that's going to change over the next several months as we head into the more technically strong period of the year, May, June, July, where we have a lot of cash coming back to investors. And I think that most likely all of that's going to get back into munis.
Talk to us about the supply front. You said in your note that we're heading into the most technically strong start of the period this year. Why is that so?
Well, I mean, where supply is up right now about 20% year over year. There's about $16 billion on the forward calendar, right? Just looking at the next 30 days. With all of that cash coming back to investors, and we're talking, upwards of $40 billion a month over the next 3 months, all of those monies coming back are going to need supply to sort of absorb that. So, we think given the forward supply of $16 billion, given what we're seeing on the prospective calendar, we think that there is going to be a push for a lot of these bankers to go out and talk to their clients and sort of tell them now is the time. The tax exemption fear has sort of been set aside. Rates are sort of in this favorable channel. Let's get to market and see what the market's going to give us.
All right. So talk to us about credit quality out there. It has not been a problem, even during the pandemic, because there's so much stimulus out there, but how's credit quality these days? Because there's a lot of economic uncertainty out there when you see companies pulling their guidance and so on.
Yeah. Yeah, I mean, there's a ton, right? And look, at the end of the day, munis are an uncorrelated asset class, right? So if we, head into an economic downturn or stocks perform very poorly, munis are going to sort of be insulated from that. But what we are seeing through our tea leaves and more importantly, the data we have on terminal is really that negative sentiment, via headlines on these local levels has really sort of ramped up. And we're talking about from late 2023 till now, our negatives in tracking really hasn't sort of returned to historical norms. To us, that means that we're probably going to see some spread widening over the next 12 to 18 months and really not reflective in current spreads that we're seeing in the market. Like anything in munis, we're very supply demand driven. And so, with all that cash coming back to investors, we just might be kicking some problems down the road because they're willing to sort of finance at lower rates and, tighter spreads over the next several months.
Talk to us about higher ed. So we've seen a lot of bonds come from Harvard and some other universities. A, how are they being received by the market? And B, how are they trading?
They're trading decently. There has been a little bit of spread widening if we're looking especially on the ones that have corporate CUSIPs. When we sort of look at them plotted to, other AAA corporates or even AA corporates, since that's a larger universe. But there has been more and more IBs looking to come to market, especially given the sort of, House approach that they might be looking to raise the tax on their endowments. By the back of the envelope math, it's going to go from costing Harvard about $35 million a year to almost $500 million a year. So it's a real cost to these universities to have the the taxation rate on their endowments increased. And I think that they're concerned that the market will be a little jittery at that point. Look, at the end of the day, these are 100-year institutions. They're not going anywhere. So I think that they're just trying to sort of get ahead of any potential, headline risk.
What about for issuers? How do they navigate increased borrowing costs and potential changes to tax exemptions? We have all this market volatility. I mean, you have to maintain investor confidence.
Yeah, I mean, they've done a really good job of, continuing to put supply into the marketplace, and the bankers, to their credit, have really sort of gone out in the last year and used that sort of taxation loss, or tax exemption loss fear talking point to get more supply into the market ahead of any potential tax changes. Now, look, as it turns out, that really wasn't the case, right? Which is good for the market. But at the end of the day, a lot of these issuers, they have to issue regardless of what the prevailing rate market is. And the good thing about the muni market is that, bonds are sold with a call option. And while you can't advance refund bonds anymore, bankers have creative ways to sort of get around things with derivatives and synthetics. But there is a 10-year call option, right? So if you issue bonds now and rates go down over the next 10 years, they have the option of refinancing. So that's always a good thing.
What's the next fun deal to look at?
You know what? I looked at the forward calendar. There's nothing super fun and exciting out there. But what's interesting is that there's so many deals that are coming in just sort of like, what we consider the blocking and tackling portion of our market, water and sewer, public utilities. Those are the things that, are not very sexy to talk about, but, they haven't performed very well this year. But, from a revenue and a cash flow basis, we like them from a credit perspective much more than, general obligation bonds right now.
All right, Eric, thank you so much. We appreciate that. Eric Gazaski, Senior Municipal Bond Strategist for Bloomberg Intelligence, joining us from Princeton. So municipal bond business, I mean, it's a fascinating business simply because if you live in a high tax location, like the greater New York City metro area, which has very high state and local taxes, in addition to what you pay federally, you can get these yields and they're taxed. Again, interest is tax exempt. So you take something that might have a coupon of 4%, but in the case of California and New York State, they have tax equivalent yields of about 6.86% because that income, that 4% dividend interest payment is not taxed.
I actually do think it's a very interesting space. When I read the stories of our reporters here at Bloomberg, it seems so relatable because you can relate to where you live and all of these fun deals. To your point, I love that question, as opposed to something like esoteric, like derivatives or options.
Exactly. So, and they're everywhere, and they fund all sorts of local, and you can go buy I buy New Jersey municipal bonds, so like Elizabethtown, New Jersey public gas utility. Sure, I'll buy that.
Wow.
So and you got a whole lot of those. So anyway, interesting to talk about the munis, and again, in interest rate environments like this, and in tax environments like this, for a lot of people, they are very attractive. So we're looking at the markets here, and just a little bit, not much happening here overall in the markets. I wonder if it's even worth going to Charlie Pellet or a Bloomberg Business Flash.
Stocks higher right now. That is a reversal from our last update when we told you NASDAQ was lower. But right now, holding on to a gain up by 13, up by just about 0.1%. But as Paul correctly says, really kind of a sleepy Friday here with the Dow, the S&P, NASDAQ all higher. Not a lot of conviction, though, with the S&P right now up by 0.2%, higher by 9. We've got the Dow up 29, up by about 0.1%. NASDAQ Composite Index up 17. That is a gain of 0.1%. Mag 7 Index. The Bloomberg Mag 7 Index up just under 0.1%. 10-year 4.43%. The 2-year 3.97%. Gold down $60 the ounce. That is a drop of 1.9%. 31.79. And West Texas Intermediate crude right now higher by 1%. 62.24 a barrel on WTI. We are looking for an up week for the S&P 500 Index on the week right now. Big move higher this week with the S&P up by about 4.5% again. The weekly number. Briefly, Verizon Communications abandoning its workforce diversity goals and a range of diversity, equity, and inclusion practices in response to a request from the FCC. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie Pellet, thank you so much. We appreciate that. Isabel Lee, she's sitting in for Alex Steele. I'm Paul Sweeney live here in the Bloomberg Interactive Broker Studio, streaming live on YouTube as well. Coming up, we are awaiting Airbnb CEO Brian Chesky. He's going to be speaking with Bloomberg TV anchors Ed Ludlow and Caroline Hyde. That should be coming up in moments. When it does, we will bring that discussion to you. I'll tell you, it's been a good week for Boeing. First, you got a whole slew of orders, including their biggest order ever coming out of the Mid-East. So a good revenue potential backlog for Boeing. And then today there's reporting, and we're staying on top of it, a couple of sources. Reuters says that Boeing is in a tentative deal to avoid U.S. prosecution, and the Wall Street Journal reporting that the Justice Department wants to spare Boeing from a guilty plea over 737 MAX charges. So again, a potential really good piece of news for Boeing. Stocks unchanged on the day, but it is up 15% year to date at a 52-week high. George Ferguson joins us. He covers the airlines, the aerospace companies, including Boeing. Hey, George, this seems like a big deal to me. How do you read it?
Yeah, so I do think it's a good situation when Boeing can avoid a felony conviction, which I think ultimately was going to happen here before the Justice Department, I guess, sort of stood down or didn't care as much. And so, there was a lot of questions, I guess, about whether or not a company that had been convicted of a felony could be a government contractor. I mean, my personal opinion was that Boeing was just too important to the defense industrial complex to not be allowed to be a defense contractor. And so they would have found, the Defense Department would have found a way around it. And maybe that's, one of the reasons for a little bit of indifference in the marketplace right now over it. But I think in the long run, it is a really, I think, good thing for the company to avoid having to be considered a felon.
You made a good point that if you're a felon, you can't really have government contracts. Critics would say that maybe the current administration probably had an influence on this. What would you respond to that? And it's probably hard to ignore, given that, for instance, President Donald Trump said that Boeing had some headaches, but it makes one of the best planes, quote, in his remarks when he was at the UAE.
Yeah, I mean, it does feel that way to me. And again, I think the challenge here is, look, Boeing did have some problems, clearly, with the 737. And, they were supposed to put in place an overseer that was going to help fix those problems. I think there's a lot of focus on the company right now, and I do think it's probably in the country's best interest not to impede its ability to be a contractor, again, to DOD and to other parts of the government. And so, look, in the long run, I don't think we need the felony conviction in order to make sure the right thing happens at Boeing. And so, George, I wouldn't throw too many stones on this one.
With a little bit of a hindsight here, put into context Boeing's week in terms of orders. How big was it?
Yeah, no, it was a nice week. So we expect more of this to come. I really think as the administration goes out and focuses on trade with the world and balance of payments, that countries around the world are going to look for ways to equalize that. And Boeing is one of the most important exporters for the U.S. And look, and we have a report on the Bloomberg Terminal about this, right? Their sales recently have definitely lagged, right? I think as customers have watched the problems at Boeing, watched the quality problems, watched the problems ramping up production. And so there probably is already a natural spring back for a pretty decent order year this year. Because again, I think some of those core customers, they haven't moved on. They're not going to buy Airbus. Their fleets, a lot of their fleets are primarily Boeing. So they want to buy Boeing. It's in their best interest to buy Boeing. But they just didn't want to get in the order book right now because it was such a mess last year. So I think that spring back, coupled with an administration that's going to go around the world and say, hey, what are you doing to balance payments with us? And when countries go, I don't know, I guess we're off sides, the administration shows them, I guess, chips and Boeing airplanes, and they go, okay, we'll take a bunch of Boeing airplanes anyways. I think, you're going to see, again, more of this. So it was a good week, but I think there's more to come, and there's a spring back as well involved here.
30 seconds, George. What's the run rate today on 737 deliveries, and where does it need to be?
In April, we think mid-20s going through the factory. I think that's pretty good. We'd like to be seeing mid-30s by mid-year, and we think they ought to be able to break 38 by end of the year for 737.
George, excellent. Appreciate you coming on short notice. George Ferguson, he covers airlines and the aerospace companies for Bloomberg Intelligence. In just a moment, we're going to bring you a discussion with Airbnb CEO Brian Chesky, speaking with Bloomberg's anchors Ed Ludlow and Caroline Hyde. Are you an Airbnb person, Isabel?
I used to be, but because the fees add up so much, I've resorted to just hotels. Because you think you're getting something cheap, but then there's cleaner, and then there's taxes and everything. And when you check out, you have to do your own laundry and throw the trash. So it almost takes away the meaning of vacation.
Ah, interesting. But now, who is using it then, do you think?
I think if you're on a budget, you definitely can find a budget that lines up with you. And this week, he wants to Airbnb everything. Not only rooms, but also experience. If you want to Airbnb a chef, you want to Airbnb this and that. So he's really trying to revolutionize. By he, I mean Brian Chesky, the CEO and founder.
Well, I use my ski gang, we use Verbo when we go out west skiing because we need the condo, ski in, ski out, and that's the best solution for us. So that works out well. Airbnb CEO going to be coming up in just a moment. It's a big company. It's got a market cap of $69 billion, which is just, $86 billion, which is just extraordinary. So it has become a big, big business, and Airbnb is one of the leaders for sure. Looking at the marketplace real quickly here, S&P 500 up 10 points, Dow up 35 points, NASDAQ up 17 points. Looking at Bitcoin, it's up 500 points, just under $104,000 per token. Alex Steele totaling away at a refinery somewhere down in the oil patch. WTI crude oil, $62 per barrel. On the yield space, the 10-year Treasury yield, steady, 4.43%. All right, let's head off and we'll listen to Airbnb CEO Brian Chesky speaking with Bloomberg Technologies anchors Ed Ludlow, Caroline Hyde, talking about being the Airbnb for everything. Let's take a listen.
We welcome to our radio and TV audiences worldwide now, Airbnb, out with a redesigned app that puts a greater emphasis on services, on one-of-a-kind experiences. But this is as, of course, anxiety remains about consumer sentiment, about our desire to travel abroad right now. Let's get through all of that with Airbnb's plans. We're joined by CEO Brian Chesky. Brian, welcome. And Airbnb more than a home. You want to be sort of an Airbnb for the world.
Yeah.
And for services, tell us the revenue drivers here. Why is more experiences, more services going to lead to a bigger business and investable opportunity?
Well, I mean, as big as Airbnb is, and we do around $90 billion a year in bookings, there's so much greater opportunity for people to monetize the biggest asset in their life. And it's not their home, it's their time. And so what if all the people's skills, all the people's passion, their expertise could be monetized? A huge percent of the jobs in the United States around the world are becoming, essentially services jobs. And there is no Amazon for services, people say Amazon's the everything store. It's kind of the everything in a cardboard box store. But there's this whole other world. It requires trust. It requires two people to have an exchange between one another. I think that's where Airbnb's core competency is. What we built is an extensible platform that's not limited to homes.
What's interesting is the chefs, the massages, the other key services that you're offering do have to be vetted.
Yes.
That's when you get the scale.
Yes.
How are you going to scale that if you're doing this on a person-to-person basis? How much does ML then take over?
Yeah, I mean, a lot of like what we do, and I think a lot of what like everyone in technology does, is you start things by hand, you learn the rules, and you train the technology, and the technology takes over, either does it or it augments the people, and that's exactly what it was like here. We start very much by hand, and then we build tools to automate the tasks that people are doing.
Brian, I started using Airbnb in the UK around 2010-11 when I went to college, right? And that was before Uber even launched in the UK. And when I think about the development of platforms and app technologies like yours, the one point of difference that an Airbnb has versus an Uber is that you don't yet have advertising. Whereas you look at Uber's ad growth, now for them on the investor side, it's a really big thing. How do you think about that?
I think it's a huge opportunity. You know, one of the frameworks I really like around how to invest is you want to invest in the most perishable opportunities first. And so we think a really perishable opportunity is, you know, launching services and experiences. The timing is right. We think advertising is a huge opportunity for us. It's an inevitable opportunity for us, but we don't think it's the most perishable opportunity. So it hasn't been something we've prioritized in our near-term roadmap. I also think it's really good to first extend our platform from homes to services, experiences, and beyond. So when we build things, we can build them as a horizontal platform.
Inevitable. That's really interesting. You got a lot of credit this week for the relaunch of the app and its ability to give you some long-term growth. I'd just be grateful to hear how you think it will drive long-term growth. I think from the street's perspective, that's more about revenue growth and profit, but maybe scale of the platform as well.
I think there's three things. Number one, there's a whole bunch of people who don't book Airbnbs because they don't come with services. They go to hotels. So what if you could offer all the services of a hotel and more in an Airbnb? So that's one way we actually could grow, is to get a lot more customers. The second way we can grow is a lot of people use Airbnb, but they only book one thing on the reservation, a home. So we can essentially get a greater share of wallet on the trip. The third and the longest term opportunity is local demand. We think a lot of these services and experiences that we're initially building out for travel consumers are eventually going to be things you're going to want to book in your own city, and that is an even significantly greater market. So there's really these three types of horizons.
Cosplaying with Megan Thee Stallion, learning volleyball with an Olympian in Rio. How did you get these one-off experiences? I mean, is this making some phone calls?
Yeah, I mean, like, well, a year ago we launched Icons, which are these extraordinary experiences hosted by the biggest names in culture. We had, you know, we made the Up House float in the sky, and we did all these really cool experiences. And then we started thinking to ourselves, how do we bring that magic to experiences? And we built this network of really interesting celebrities and global icons. And one of the things that we found is a lot of them heard about what we're doing, they reached out to us. I think a lot of these global celebrities want to connect directly with their fans. They don't just want to have a parasocial relationship on social media. And I think the more we talk about AI, the more we start to realize that we are accelerating our life living in a digital realm. We're spending more and more time on devices. And we want to be the kind of company that are getting people off devices into the real world, just as a balance. And I think that could be a very exciting proposition for the future.
As you can imagine, this show's been talking about AI relentlessly for the last 3 years, but we took a pause and started talking about tariffs and the economy relentlessly. You said now is the perfect moment to be launching these services and experiences. Why, in this environment where you saw consumer sentiment today is woefully low?
I mean, well, number one, we reported really, really good growth within travel. So I think people are still traveling. And I think when consumer sentiment is unsteady, they still want to travel, but they often want to find more affordable options. Airbnb is a great way to do that. But beyond that, like, this is a very long-term bet that we're making over the next 5 years, and I think this will endure across any kind of economy. It's just good to remind people, Airbnb started during the Great Recession of 2008, and so I think a lot of the great businesses are starting during, like kind of a weakened economy.
Brian, you're pivoting to founder mode, right?
Yeah.
How's that going to help Airbnb navigate the world that it's in right now?
I think founder mode basically just means like running a large company with a hands-on approach where you're in the details, you're leaders in the details, and everyone's rowing in the same direction like a startup. I think those principles are more important now than ever with this new technological revolution that's in front of us. You need people that are able to basically have their hands on the steering wheel and not be, in essentially like a self-driving car, which is, how more professional managers typically run things. So I think this is the perfect time to lean into the future, to put the pedal to the metal, put your hand on the steering wheel, and really drive transformation. And I think a lot of the great companies in history have been led that way.
With that in mind, Airbnb, the technology company, what's its core competency? What are your people really good at that other companies are not?
I think a few things. Probably a few, but I'll highlight just two on the right now.
Please.
The first is our application. I think we have one of the most beautifully well-designed and built apps in the world. We're able to show it's incredibly intuitive. I believe we have one of the best design teams in the world. So we have really great applications. And so take AI, there's a lot of development on the large language model layer. But the applications haven't seen a lot of development. If you pick up your phone, almost every app looks exactly like it did before generative AI came on the scene. So that's the first thing. The second is probably even more important, the offline world. We're really good at building apps, but I think we're even better at designing this system of trust between two strangers to live together. I mean, nearly 4 million people a day live together in Airbnb in nearly every country in the world. Think about all the ways you need to keep people safe, handle their issues, match supply and demand, facilitate money, make sure they're having great experiences. There's so much more. The offline world, the Airbnb, when people see Airbnb, they see an app, and the app is just to scratch the surface of our community.
I love that you're talking online and offline. Briefly, when you're thinking about Klarna having to decide that actually all the AI focus has to be unwound a little bit, customer service is not working as they wanted, bring people back. You're bringing AI to customer service. How's that going, and how much do you have to rely on people still?
We still have to rely a lot on people. I think it's going incredibly well. We launched a customer service agent in the United States to all English-speaking users, where now if you need help, you can reach out to an AI customer service agent. It's a front line. It's been trained on, hundreds of millions of customer trips to be able to be 24/7 and be an escalation point to humans or be able to answer the question themselves. But I think the key lesson here is you don't want to rush into a trend. I think that people got really, really excited about AI. They inevitably thought it's the future. It's going to do all these tasks in the future. All that's true, but you can't skip steps. And people want things to work. And so, we didn't want it to be an AI lab. We wanted it to be something people could trust. And so we've been very, very careful about focusing on solving real problems responsibly with a model that doesn't hallucinate. And I think that's what we're doing.
Airbnb CEO and co-founder Brian Chesky, it's great to have you back on Bloomberg Technology. Thank you very much. That's coming up. Thank you.
All right, that was Airbnb CEO Brian Chesky speaking with Bloomberg Technology's anchors Ed Ludlow and Caroline Hyde. Mr. Chesky in our New York studio there, so that's a good thing, talking about Airbnb and the growth of Airbnb, and is still keeping an optimistic outlook despite some of the economic uncertainties here. All right, it's Friday. We need to talk to one B. Ritholtz. Barry Ritholtz joins us. He's the founder of Ritholtz Wealth Management. That's his day job, but he's also equally famous as host of Masters in Business podcast. I think if it's not the, I'm going to call it the most popular one we have here on the Bloomberg platform. Hey, Barry, quite a turnaround for this market. I think I'm still living in a world with much higher tariffs than we started the year. But I got a stock market's kind of right back to where it was at the beginning of the year. Does this make sense to you? Well, we had Barry.
Here I am. Sorry.
There he is.
I'm muted when I'm listening, and I don't want any of my noise to get in your way. Yeah, it makes perfect sense because, I got a lot of pushback to remember the discussion back in March, tune out the noise. Eventually, the stock and bond market, if the policies are too damaging to the economy, future corporate revenues and profits, they will let whoever's in the White House know in no uncertain terms. And so we've seen this happen in the past. Look, when Trump was reelected and he had done tariffs in his first term and he had talked about tariffs during the entire campaign, I think the consensus was we'll get like a 10% tariff here or there. Hey, we all know China's a bad actor. Maybe he'll bring them to the negotiating table. What ended up happening is 100% tariffs on 182 countries and 130 or 40% on China. You know, the market turned around and said, oh, our expectations for forward revenue and profits are way too high. We have to adjust downwards because tariffs are inflationary. People have a finite amount of money. Consumers are going to spend more when you put in this global giant VAT tax, because that's effectively what it is. Even if some companies, retailers, manufacturers eat some of the tariffs, they're not going to eat all of it. And so, hey, make up a number, 10, 20% too high in revenue. And of course, profits always fall faster than revenue. So we're 20, 30% too high in profits. Doesn't take long, down 5, down 5, down 5, 3 days in a row for the market to say, okay, we're now adjusting to this new policy. But, you know, ultimately, Scott Bessent triumphed over Peter Navarro and convinced the president, hey, this is really disruptive. Let's just, you know, put a pin in this for 90 days. And the market said, that's fantastic.
In the UMich survey, one of the things that really caught my eye was consumer views of their current personal finances dropping to the lowest since 2009 and financial expectations sliding to fresh record lows. What are you hearing from your clients? Do you also sense the same gloom, or are they more pessimistic that things will be okay? Optimistic that things will be okay?
None of the above. I'm going to let you in on a little secret. The vast majority of sentiment surveys are complete, total waste of time. It's not hard data. It's soft data. It's always lagging. It's always backwards looking. It always tells you what happens over the past 6 months. I've been writing about this since, I don't know, 2012. And the thing that really cracks me up is just look at the Federal Reserve's survey of inflation expectations. It was at its lowest point. It was at its lowest point sometime, I want to say that's like April or May 2020, just before inflation, CPI and PCE skyrocketed from, 2% to 9% and change. You want to guess when it peaked? It peaked sometime around June 2022, around the same time as inflation peaking. And remember, these are 1 in 5 year forward inflation expectations. So right before the biggest spike in 40 years, it was at multi-year lows. And right before the biggest crash in CPI and PCE, or whatever your favorite inflation measure was, forward expectations, they actually didn't peak in June, they peaked in July. And then, but inflation more or less peaked in June 2022. So if you're looking at them for any sort of future expectation as to what's going to happen in inflation, man, you're looking in the wrong place. Nobody knows what's going to happen with inflation. And 5 years out, LOL, stop.
So given that, Barry, what are you going to be looking on the lookout for in the coming days and weeks and maybe even months as you continue to evolve your investment outlook? What's most important to you?
You're going to hate this answer, but it's the God's honest truth. Tell me the last person who whispers into President Trump's ear before he makes a decision, and I'll make it easy for you.
Yep.
Is it Scott Bessent or is it Peter Navarro? And it's never going to be 100% all at one. But if it's 90% Scott Bessent and 10% Peter Navarro, hey, that's fantastic. The economy will do well. The markets will do well. He's a Wall Street guy. He's the one who did the 90-day pause. I bet he was behind the New Deal with China. If it's Peter Navarro, well, then be sure to have your air sickness bags handy, because everybody is going to be unhappy with your volatility and really, let's be blunt, an irrational retread of the 1930s Smoot-Hawley legislation. I think we all have to follow what many Trump supporters said about him last term as president. Take him seriously, but not literally. So my best case scenario is this is all a negotiating tactic. We all know China can be a bad actor out there. If he manages to bring them to the table, maybe put some protections in for U.S. IP, stop hacking American companies, and treat our investors and companies more fairly in China, that's a big win. All right, it was a lot of Sturm and Drang and a lot of noise to get there, but if Scott Bessent is dominant and Pino Navarro is waning, we'll get through this just fine.
All right, it's getting warm out there, Barry. What are you driving these days?
Well, it's kind of drizzly today, so I have errands later. I'll take the truck out. But this time of year, when, you know, it's 70-something, this is open air cabrio driving. And whether, I don't care if you drive, I just had this conversation with people. You don't have to go spend $1 million on a Lamborghini Spider. You could buy an inexpensive Mazda Miata, 3 years old, 5 years old, it'll cost you $20,000, $22,000. What is more fun when the sun is out, the sky is blue, the wind is in your hair? That is peak automobile. And in May and June, nothing beats a convertible.
There you go. All right, Barry Ritholtz, folks, auto aficionado. He has a podcast, Masters in Business, wildly popular, great guest. I highly recommend it. And then he's got a day job at Ritholtz Wealth Management, managing some money. So we appreciate getting a few minutes of Barry's time. For our listeners in the U.S., a reminder, you can listen to us via satellite radio on Sirius XM Channel 121. Access the world's only global audio business network, coast to coast, 24 hours a day. Bloomberg Radio on Sirius XM Channel 121 is presented by ShipStation. Stay with us. Your top stories in global business headlines are coming up in just a moment. All right, here's my commute. I am a New Jersey Transit train rider. So here's my revised commute home. I will take the 6 train from our offices down to 33rd Street. I will then walk east all the way to the East River. When I hit the East River, I'll stop. And there's a pier where they have ferry service to New Jersey. I'll hop on the 105 ferry. It's 1 hour. That takes me to Highlands, New Jersey, where John Tucker resides. I will then call an Uber to drive me the remaining 30 minutes to my Jersey Shore compound. And that's how we're going to deal with it today. Come Monday, we'll see. So hopefully all the New Jersey Transit riders are doing well today and coping. And hopefully these folks are coming back. We'll have more coming up. This is Bloomberg. Thank you.
Thank you. Oh my gosh, good luck. Go.
This is CBS News on the Hour, sponsored by Progressive Insurance.
I'm Steve Kathan. President Trump's wrapped up his Middle East trip by putting Iran on notice. CBS's Natalie Brand.
His administration has handed Iran a proposal for a new nuclear deal. And he also went on to say that Iran knows they have to move quickly or something bad is going to happen.
Russian and Ukrainian delegations met today in Turkey for about 2 hours. CBS's Elizabeth Palmer.
The biggest achievement is that they have agreed to swap 1,000 prisoners each, although there have been prisoner swaps going on all the time, so that isn't as great as it sounds. One Ukrainian source told the Reuters news agency that Moscow's demands at the table were non-starters.
The man convicted in the near-fatal stabbing attack on novelist Salman Rushdie was sentenced this morning to the maximum 25 years in prison. It's a bad scene in Juneau, Wisconsin, about 60 miles northwest of Milwaukee. The mayor says a tornado did widespread damage.
The worst that I've seen is this stretch we're sitting in. It must have ripped right through here. There's an adult home. Roof was torn completely off.
350,000 commuters affected by the engineers' strike that hits New Jersey transit trains. Union official James Lewis says they submitted a late proposal.
The national mediator that was there asked them to try to give us a counter. We still had a couple hours left before strike deadline, but they decided to leave the room.
New Jersey Governor Phil Murphy.
Our single highest priority, in addition to making the system work, just as it has been for the past several months, is reaching a fair and affordable deal as soon as humanly possible.
Families who lost 346 loved ones in 2 Boeing crashes of 737 MAX planes 6 years ago overseas say they've learned the Justice Department intends to back down from any criminal prosecution against Boeing. On the Health Watch, new ways to check blood pressure may not be the best way.
The most reliable way to measure your blood pressure is with the traditional cuff, instead of smartwatches, phone apps, and other devices. Dr. Eugene Yang is among researchers who wrote in JAMA Cardiology.
They haven't really been tested appropriately.
He says doctors need to agree on how to test the new technology, which relies on artificial intelligence, and that AI needs much more data to help it learn how to properly interpret signals from the body. Heather Bosch, CBS News, Seattle.
Verizon says it's ending DEI programs. It wants federal approval to buy Frontier Communications. This is CBS News. Tom Cruise has made another grand entrance.
Cruise climbed on top of a couple of small planes at the London premiere of Mission Impossible: The Final Reckoning. The aircraft, same type Cruise hangs onto in the movie, were part of a backdrop for the red carpet event. The actor dazzled the crowds at the Cannes Film Festival on the French Riviera the night before, where Final Reckoning got a 5-minute standing ovation. The film opens in theaters a week from today. Deborah Rodriguez, CBS News.
The New York Times reports the Trump administration yesterday fired nearly 600 employees at Voice of America, the federally funded news outlet providing reporting to countries with limited press freedoms. Layoffs targeted contractors, most of them journalists. The Washington building that houses VOA is for sale. Steve Kathan, CBS News.
From the world of politics to the world of business, this is Balance of Power. Live from Washington, D.C.
President Trump says Republicans must unite behind one big, beautiful bill, but they're not. Welcome to the Friday edition as House Republicans on the Budget Committee sink the bill with spending cuts, tax cuts, and a higher SALT cap. We're going to get into the fine print coming up with Maya McGinnis at the Committee for a Responsible Federal Budget. The president wrapping his trip today in the Middle East. We're going to talk about some of the deals struck and new investments in high tech and specifically AI. When we're joined by former Congressman Denver Riggleman live from Dubai a bit later this hour with analysis from our panel today. Democratic strategist Roger Fisk is with us alongside Republican strategist Lisa Camuso-Miller as we try to get to the bottom of what just happened on Capitol Hill. First, of course, though, the markets and the Friday trade with our good friend Charlie Pellet at World Headquarters in New York. Hey, Charlie.
Well, hello there, Joe Matthew. You are too kind. We have got the Dow, the S&P, NASDAQ all advancing just about the best level of the day right now on the S&P 500 index. Stocks pushing higher, on track for a big week for the U.S. equity market. For the week, the S&P is up roughly 4.5%. 0.2%. Today's numbers with the S&P right now up 13. That is a gain of 0.2%. Right now we're at 59.30. The Dow higher by 53, up 0.1%. NASDAQ up 31, gain there of 0.2%. Stocks did spend much of the morning fluctuating between gains and losses. 10-year at 4.43%. The 2-year currently yielding 3.96%. Spot gold down 1.7%, 31.83 the ounce. And West Texas Intermediate crude up 1.5%, 62.56 a barrel on WTI. Stocks and investors focusing on trade rather than the day's economic data. Consumer sentiment fell to the second lowest on record. This according to the University of Michigan. Joanne Shu is director of surveys at the university, and she says there was one big topic on consumers' minds.
We've been seeing a rising share of consumers spontaneously mentioning tariffs. A few months ago, it was really a fairly small number of people, and now it's almost 3/4. It's cutting across partisan lines. It's really on everyone's minds. And at this point, consumers are really waiting for the other shoe to drop in terms of its impact on inflation.
Joanne Shu of the University of Michigan. A massive corporate deal involving two of the biggest names in cable. Charter Communications has agreed to combine with closely held Cox Communications in a cash and stock deal. Right now, we have got shares of Charter advancing by 1.1%. Rival Comcast, little changed on the day, down less than 0.1%. Recapping, stocks higher. Best level of the day on the S&P, up 0.2. Balance of power continues right now. And back we go to Washington. Once again, your host, here he is, Joe Matthew.
All right, Charlie, thank you so much. The voice of Wall Street and the New York subway leading our way every day on Balance of Power. Thanks for being with us on the Friday edition. You made it to the threshold of the weekend. Balance of Power every day on Bloomberg Radio, on Satellite Radio Channel 121, and on YouTube. Find us right now by searching Bloomberg Business News Live, because we've got news, high noon in Washington, and it didn't even get out of committee. That's where we stand now with the one big beautiful bill, as Donald Trump calls it, that we have talked so much about. It failed to pass the Budget Committee. This was supposed to be a key moment. After all the wrangling, the 11 bills come together, assembled into one big beautiful bill by the Budget Committee, so Rules could then accept it next week and it would go to the floor for one big beautiful vote. Apparently, this is not happening. The line coming out of the Budget Committee chair. For members, I do not anticipate us coming back today. Jody Arrington speaking there. The final tally, 21-16. So who's getting a phone call from Donald Trump tonight? He's on his way back from Abu Dhabi. He's got time. He's sitting on the jet with the phone. A lot of people in the other ear. Here's the list. You don't have to look further than the terminal. Republican representatives, you can recite it for me. Chip Roy, Ralph Norman, Josh Brecheen, Lloyd Smucker, and Andrew Clyde. Voting with Democrats. If you're not too familiar with the process, it is incredibly rare for something like this to not even get out of committee. What is the speaker going to do now? It's where we start our conversation with Maya McGinnis, watching this all happen from her perch as president of the Committee for a Responsible Federal Budget. Maya, it's great to see you. We've got breaking news here, and I've got a lot of questions for you as always. But based on what we just saw and heard on Capitol Hill, is there a chance that one big beautiful bill never passes at all?
Well, first off, what timing is this, right? I'm just still processing everything that just happened after watching the whole hearing. I don't think that's the way this story ends. I think that this proceeds after there are some negotiations and some changes to accommodate the fiscal hawks who voted against it. I think it goes out of the House. I think then you have another massive, massive showdown with the Senate, which is unwilling to even do some of the reforms that the House has included. Ultimately, and I've been saying this for a while, I think it could pass as a massive budget buster, as it is currently, or it could end up being just temporary extensions and limping along to continue to figure it out. But those fiscal hawks are not comfortable with the borrowing that is in the bill, and I sympathize with them. It's huge.
Well, let's talk about busting the budget here, Maya, because as always, the committee has done quite a bit of work looking at least what we believe, what we have now in terms of legislation and what it might mean for the deficit and debt moving forward. The Developing House Reconciliation Bill, as you're right, is shaping up to add roughly $3.3 trillion to the debt through fiscal year 34, setting the stage for more than $5.2 trillion of additional debt if policymakers ultimately extend temporary provisions. And that might be right where we are, Maya, because Speaker Johnson needs to sweeten the pot for SALT Republicans, and he needs to cut even more to make the Freedom Caucus happy. So are these numbers going to be even worse?
Yeah, there's a couple of points. One, a big part of this bill is just temporary tax cuts. Remember, we're in this situation right now because there are a bunch of temporary tax cuts expiring. And you've got the Senate saying, oh, we shouldn't have to pay for them because we always meant for them to be permanent. They made them temporary, so the bill would be smaller when they first passed them in 2017. And now they're saying they shouldn't have to pay for them. And yet, in the very same breath, they're also, so far in the House and the Senate, I assume will do the same thing, putting in new tax cuts on a temporary basis. So it's really arguing, I mean, baselines, people are sick of baselines, I'm sure, but multiple baselines at one time. Don't charge us for extending things. Don't charge us for the full cost if they're temporary. So there is a very strong chance that these tax cuts, if they're put in place, will be extended because it always plays out that way. So the price tag will be much larger there. And then two, to your point, they're not done negotiating. The SALT folks don't think that a $30,000 cap is enough. They want to up it. This is a very expensive bill, and the fiscal hawks would not be comfortable doing that in a way where it's just deficit finance. They'd want more offsets.
We talked to Nicole Malliotakis about that around this time yesterday. The Republican from New York has this incredible scenario in which she has to straddle her sitting on the Ways and Means Committee with her membership in the SALT caucus. So they got to $30,000, raised the cap to 30, up from 10. Here's what she told us yesterday about what that means for her district.
SALT right now is roughly, it's about $215 billion. We want to stay within that piece. Now, that may mean we need to adjust the dials. A tripling of the deduction to $30,000 covers 98% of my district. Now, would I have liked a higher number? Sure. But it's not what you want, it's what you need.
Well, here's the problem, Maya. She wasn't even allowed in a meeting with SALT Republicans the other day because of her role on the Ways and Means Committee. This is how chippy it's gotten on Capitol Hill. Does the issue of SALT as a singular issue here threaten this bill the most?
It's interesting. I saw that interview and I thought, I wonder how people will respond to that because the SALT group is diehard on this issue. Is it the biggest threat? I don't think it's the biggest threat. I think the biggest threat is the fiscal conservatives. I think it's the debt levels. I think it is the more that bill hangs out there and people understand that you are talking about adding $3 to $5 trillion from this version. And like I said, I think it gets worse, not better. I think the real threat is that there are just enough Republicans who've been talking about the need for fiscal responsibility and spending cuts. They cannot stomach, no matter what the talking points are, they cannot stomach a bill that would add to deficits and debt. That's where I see it could break down. The SALT folks should be very happy with 30. They're still negotiating. They'll negotiate to the last minute. It's incredibly expensive. And there's
that from Maya McGinnis? They're listening to us right now, Maya. You're going to get the emails just like I am.
Yeah, I sure am. And I know this is the only group that's scarier is the seniors when you say something about not adding new benefits. But, there's a strong and interesting case, and people don't appreciate this, but why would states that are low tax states be subsidizing high tax states when those high tax states are getting something in return? They are getting benefits. They are getting programs. These are the decisions the states make. So it's difficult to say, well, you have fewer benefits, so you should subsidize ours, which is really what it is. I'm getting
to the heart of the matter. Yeah, I'm in big trouble. I'm going to go home after this
Sorry
is
to
over.
bring you down.
Spending time with Maya McGinnis here. As if you're just joining us, the bill failed in the Budget Committee. The lead off to the big, beautiful week that was going to end with a floor vote next week. Maya, you've been through this a couple of times. What do you think happens next? It looks like they're not coming back today. Could Speaker Johnson still pull off a floor vote next week?
I think he could. I'm not saying that it's certain at all, but I certainly think it could. First, I've been amazed because every time I look at where they are, I'm like, I don't see how you get to the next step, and they have. And I think Chair Arrington has done a great job kind of making everybody feel heard through this. I think there are some trades that could happen. It seems to me that some of the holdouts might say, in return for, or we want you to have, we are very, very uncomfortable with how these tax cuts expire, and then the savers don't phase in until after President Trump leaves office. They wait 4 or 5 years, right? So they're like, this is all backloaded in the savings. It never happens when it's structured that way. I could see them insisting that the savings is moved up, and that becomes something that would entice them to vote this out of committee. And then there might be some space for SALT there. Again, I don't think there should be, and it's so expensive, hard to do it. But I think that's what it is. It's moving up some of the savers that might get some folks to buy in.
So you're saying there's a chance?
There's
boy.
certainly, and I think it depends on what the president has to say as well. I'm sure they will be hearing from him. And,
right. Well, that's exactly right. We've seen him turn Ralph Norman around before. I don't know if Chip Roy's taking that phone call today, Maya. This is going to be a really interesting 12-hour period to track. Maya McGinnis in the clutch. How about that at high noon here on Bloomberg? Where else are you going to hear that? With the president of the Committee for a Responsible Federal Budget. I see you, Matt Miller. If you want to email me, you can. I'm trying to ask the right questions here as we find our way to a deal on SALT. It'll happen eventually, according to Maya McGinnis. And maybe we will see a vote next week. Of course, if it happens, we'll experience it all together here on Bloomberg. We're going to have a special conversation coming up next with the former congressman from Virginia, Denver Riggleman. He's in Dubai, investing in AI. His view on the president's trip next, right here on Bloomberg.
12:21 on Wall Street. We do check markets all day long here at Bloomberg. Big week for the U.S. equity market, on track for a gain of about 4.5%. Stocks are pushing higher, and right now we're holding close to session highs, with the S&P advancing by 17 points, up 0.3%. We've got the Dow up 90 now, up 0.2%. Nasdaq up 35. That is a gain of 0.2%. Broad-based rally with the Russell 2000 index up 0.5%. Your 10-year 4.42%, the 2-year 3.96%. Gold now down $55 the ounce, down 1.7%. And West Texas Intermediate crude up 1.6%, $62.58 a barrel. EOG Resources says it has been awarded a concession to explore for oil onshore in Abu Dhabi, a development that will help the largest shale-focused producer by market value further an expansion beyond the United States. EOG Resources down now by 0.2%. Again, recapping, stocks are advancing. S&P up 17, gain there of 0.3%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pellet. Balance of Power continues right now. Back we go to Washington. Once again, your host, Joe Matthew.
Charlie Pellet, thank you so much, live from World Headquarters in New York, and of course watching Wall Street for us every day here on the fastest show in politics. You know when to tune in. This is a routine now, right? You start at 12 Eastern, high noon, because you know there's going to be breaking news in Washington, whether the president's in town, which he's not right now, on the way back from the Middle East, and we're going to talk about his trip in a moment with Denver Riggleman, or the other end of Pennsylvania Avenue, where we had a breaker, high noon. The Budget Committee fails to pass what the president calls one big beautiful bill. Yeah, if you're just joining us, we needed to catch up on this. Chair Jody Arrington delivering the news a short time ago. Listen.
Well, the noes have it. The committee stands in recess, subject to the call of the chair. I want to thank everybody for their time and patience, and Godspeed and safe travels.
Godspeed and safe travels. Saying later, dryly, for members, I do not anticipate us coming back today. The final tally, 21-16, as you heard it. Chip Roy, Ralph Norman, and company voting with Democrats to sink the bill. This coming just an hour or two after President Trump went on social media, Truth Social, calling on Republicans to unite behind one big beautiful bill. He said, stop talking and do it. Well, guess what? Chip Roy is still talking, and at the moment there is no way forward here. It was supposed to clear budget today, rules on Monday, to the floor in time for a big full smash vote ahead of Memorial Day. That was supposed to be the plan. Now we're picking up the pieces, or back to the drawing board, or whatever cliche you suggest. And somebody who's been through the throes of debates like this, staring down the barrel of a deadline, in this case to a looming debt limit expiration, is Denver Riggleman. Now, we're going to talk to Denver. I thought we were going to be talking about a couple different things here, and we are, because Denver's spent the week, our former Republican congressman from Virginia, who you know from this program, has spent the week overseas, just as President Trump did. Denver now helps to run and has founded an AI company, which is what brought him over there. We're going to get into some of the investments and the important turn toward innovation in the Middle East with Denver, who's joining us right now live from Dubai. I've got to ask you, though, Denver, I guess this is why partly you're not in Congress anymore. What just happened in budget? These are members of the Freedom Caucus who sank the bill that President Trump says needs to pass. Is this thing dead? Can the speaker find a plan B?
It's not dead, but it's on life support. You know, I know all of them, right, Joe? And, you know, I've known Chip, I know Ralph, I know Jody, I know them very well. And, you know, Jody can sometimes be pretty practical, but Ralph and Chip, once they dig in, they're going to dig in. So I think what we're looking at right now is they're going to ask for concessions in order to get that out of committee. And I don't know if everybody's going to be willing to do those concessions. So I think you're going to see a couple days of crazy up there on the Hill. And with Jody coming up and saying, oh, we're not coming back today, yeah, there's going to be a lot of discussions and screaming and yelling tonight. You know, I know. So that's what's happening right now, my friend. That's what's happening right now.
Okay, and the phone calls are going out too, right? President Trump is on Air Force One with nothing to do but talk.
Yeah, I mean, who knows, what he's saying right now. I mean, but I got a feeling that the phones are lighting up all over D.C.
Incredible. Whether or not we see a floor vote next week, I don't know if that's important with regard to timing for this speaker, Denver, but is Donald Trump still de facto speaker, or does Mike Johnson have any levers to pull?
Mike Johnson has no levers. No, absolutely none. It's going to be what Donald Trump says to do, and we've known that since the beginning when Mike was elected speaker, and as you know, I know Mike also. But I think what you're seeing right now is Donald Trump tried to push this train of this big, beautiful bill, but there are still certain realities that happen, especially in the Freedom Caucus and how districts vote. And you might say, well, they have to be completely behind Donald Trump. They have to completely do these type of things. But there are still some things they just can't go against. And when you're looking at this massive deficit push and what's happening with our debt and deficit, what happens is they're looking at a midterms. That's a crash and burn. And I think, Joe, that's what you're looking at. They're so worried about crash and burn midterms. And right now, they're more worried about winning their election and supporting Donald Trump. I'm telling you right now, that's what's going on.
Amazing. It's not often I get to talk to you when you're in Dubai, and I want to hear about your week. I want you to help us frame what we just saw on the president's journey, because you're there with a firsthand experience. We should let everyone know that not only does former Congressman Denver Riggleman run a distillery in beautiful Northern Virginia, well, I guess Central Virginia, but he also runs an important security firm, the Rig security firm, and now Hoodle AI, a health tech and security firm that has made Denver Riggleman one of the only people I've ever met who knows what it's like to buy a Blackwell chip. Speak to me, Denver, about the tens of billions of dollars that we saw unlocked in the Middle East this week, what this means for countries like the UAE, but also entrepreneurs like yourself.
Well, sometimes you have to separate, how you feel politically when you're doing business, but it's very difficult to here. And some of the things that we saw were disturbing over here, the way that, Trump wanted to make his entrance and things like that. But I will say this. For us, this started over a year ago. This was such a dynamic place to do business anyway, well before Donald Trump came over here. But there is an unlocking of technical and financial transfers going on. And you know what? Bloomberg reported this 6 days ago. You guys did on CFIUS, right? The Committee for Foreign Investments in the United States, and how they're going to actually streamline those actual regulatory issues. And what does that mean for the UAE and for other places here in the Middle East, like Saudi or Qatar? What that means is that you're going to have much quicker, more efficient technology transfer outside of the CFIUS type of regulatory structure that you have to use. And that was something that I did not know was going to happen. I actually read it when you all reported it. And I was on the Financial Services Committee, Joe, so I actually know how CFIUS works. So for me, the unlocking of the potential here, I believe we already had American companies coming here. I think that American companies, specifically by the UAE, have been invited to come in here and do business. And what we've seen is incredible reception, courtesy, and respect as we're here with our AI company. I've never seen anything like it, Joe, to be honest.
Huh, that's incredible. So this is a new frontier, obviously, for high tech. Is it an answer to our decoupling with China?
I think a lot of people talked about that here. I don't like to, there's so much pride and respect that the Emiratis have when they're having discussions with you, especially when they find out you're a former congressman. They actually sometimes push away from politics because they don't want to get that in the way of business. It is such a respectful culture, and that's something that I've tried to respect as we're going on here. But what you're looking at, I think the UAE, what I was told by somebody very high up in one of the Emirates, listen, Joe, I've been from Abu Dhabi to Dubai, all the way up to Ras Al Khaimah. I've met with the highest, some of the highest, I would say, positions in some of these areas. And what they're saying is listen, hey, nobody's ever going to be the United States. But we do believe that we can be the answer, right, for technology and for growing other companies from the United States, but really being that answer to other countries that might be looked at as threat countries. But you have to remember, too, UAE does business everywhere. It's a dynamic, diverse, accepting environment as long as you follow the rules, right? You have respect, right? You go forward in a way that's very, very legal. We've even had discussions with individuals asking us about, can our AI help with compliance? So there's so much going on here. But again, I think the UAE looks at themselves, and also I would say Saudi and Qatar as we're going forward here. I think they look as the linchpin in the global world for dynamic building of companies in tech, services, and manufacturing. And what we've seen here, I had some stories, Joe, when me and you have a bourbon sometime, the stories here about the growth of American companies is pretty extraordinary.
Well, this is extraordinary. We saw Jensen Huang there with Donald Trump in the Middle East talking about selling millions of chips in the UAE. When we consider the diversion rule from the Biden administration that came in at the last minute and made this impossible for some of the countries that you're visiting this week, Denver, do we look back at the Biden administration as a misstep on the march to innovation in AI? Are they righting the wrong?
It's actually a really great question. I think, though, when you're looking at China specifically, you know, also when I was on the Financial Services Committee, I had to go to South America and talk about the Belt and Road initiatives from China, which is really a threat to us economically. And we can go on that. I was on the China task force. So I would say that Joe Biden had a very difficult decision on how you protect actually against Chinese practices and what we do with our chip makers and our dominant technology like with NVIDIA. I think what you're seeing now as we're seeing sort of this change in the worldscape is you're looking at security structures that are being actually talked about over here right now. And I think what you're seeing with the UAE, they're actually pledging that they're going to have those security structures in place, right, to guard against any type of, I would say, illegal IP transfer between China, right, and U.S. companies that are coming over here. You know, last year when I was here, and, you know, this is my second time last year, we were actually talking about NVIDIA chips and working through attestations for the State Department to see if we can do it, and it was really a no-go. So it's very interesting to me that NVIDIA now has a play over here, but I do think there could be some security concerns, but looking at the UAE, they have been trying to address that down the line, and it's something I've been very blunt about. And again, they're very respectful when I talk about things, but you know, Joe, I still got to be me, right? And I still got to actually outline the things that I think, you know, that's just the way I'm wired. But these are, again, I do believe, and I'm going to say this cautiously, I do believe that you see a new security posture here in the UAE that's saying, listen, you come here and American companies will be protected. And that is some of the assurances we've been getting over here. Now, is that true? We'll see. But right now, from what I've seen with the UAE, with Dubai, with Abu Dhabi, all the way up to the northern province of Ras Al Khaimah, I think that we're having a resurgence and looking at security and them as being allies to us in this region. But again, it's trust but verify, but they also think the same about us in some ways too. So it's very interesting.
Wow. This sounds like a fascinating trip for you, Denver. You got to come see us and let's distill everything that you experienced. I want to hear more about the investments you secured and the rest of it when you get back to town. So come see us here in Washington, of course, and travel safe when you get home. The former congressman from Virginia, Denver Riggleman, with his AI company, his security firm, and life in politics, not to mention his experience in the Air Force in the national security space behind him. Really interesting, and we'll have more to discuss with Denver. Maybe over that bourbon. Can we do that here? I think maybe on the Friday edition, if producer James lets us. We'll assemble our panel next. We have a lot more to talk about following the breaker on Capitol Hill. Yeah, the president's on the way back. He's got some phone calls to make because one big, beautiful bill could not even get through the Budget Committee. Never mind what's in store in the Rules Committee. The Freedom Caucus has its hands firmly on the wheel right now. We'll have more with Roger Fisk and Lisa Camuso-Miller as we get to the bottom of what's going on here in the nation's capital right here on Bloomberg.
It's 1240 on Wall Street. We do check markets all day long here at Bloomberg. We have got the U.S. equity market holding close to session highs. We're on track for a winning week. On the week, we're looking at a gain for the S&P 500 index of 4.9% right now. S&P higher by 19, up by about 0.3%. The Dow up 169, up 0.4. NASDAQ up 31, up 0.2. Again, your key takeaway, we are very close to session highs on the S&P. Stocks are rising as trade hopes offset this morning's sentiment data. 10-year 4.43%. The 2-year is currently yielding 3.97%. Gold down 1.8%. Spot gold now at $31.83 the ounce. West Texas Intermediate crude up 1.6%. 62.63 for a barrel of WTI. Bitcoin up 0.5% right now. 104,025 on Bitcoin. A measure of consumer confidence in America's economy tanked this month. And with that story, here's Bloomberg's Vinny Del Giudice.
The University of Michigan reports its nationwide consumer sentiment index dropped to the second lowest on record as White House tariffs rattle the economy. Inflation expectations rose to multi-decade highs. We're talking the 1980s and early 1990s. A gauge of the overall U.S. economic outlook dropped to an almost 45-year low, and household financial expectations slid to a record low. Vinny Del Giudice, Bloomberg Radio.
The Justice Department is considering an agreement that would allow Boeing to avoid prosecution for its role in 2 fatal 737 MAX crashes, that according to lawyers representing the family members of victims in those accidents. Boeing shares, they're down now by 0.3%. Briefly, after earnings, Applied Materials shares are tumbling 6.2%. Take-Two Entertainment after earnings, trading lower now by 1.5%. For on-demand news 24 hours a day, subscribe to Bloomberg News now wherever you get your podcasts. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you, sir. Live from New York, Charlie Pellet on the markets. I'm Joe Matthew in Washington, and this is Balance of Power on Bloomberg Radio, satellite radio, channel 121, on YouTube as well. Good time to dial us up. Search Bloomberg Business News Live, because we've got a lot to talk about, whether you're plugged into the Bloomberg Professional app or listening to us on an old-fashioned radio station. News tends to break every day around 12 noon when we come on the air. We're ready for it. That's why we meet here every day. Happened again today, as we're going to discuss with our panel in just a moment. The one big, beautiful bill the president's talked so much about. Couldn't even get through the Budget Committee. And so it is back to the drawing board on Capitol Hill with a bit of a protest by the Freedom Caucus slowing things down. We've also got a breaker on the terminal right now, and it's coming from the Federal Reserve. Don't confuse this with a Doge story, because they may not be related. We're just learning this now at Bloomberg, as the Fed announces plans, or we're reporting plans, to shrink the Fed's workforce by about 10%. Job cuts are coming to the Fed. It'll happen over the next several years, mainly through attrition. According to people familiar speaking with Bloomberg, the Fed's going to be offering deferred resignations to some workers, according to sources we're talking about. And so the shrinkage continues here in Washington, whether Elon Musk is in town or not. And we assemble our panel here on the Friday edition, and we've got a good one for you. Roger Fisk is back, former special advisor to President Obama, our Democratic strategist. And, of course, the great Republican strategist, Lisa Camuso-Miller, former RNC comms director, host of the Friday Reporter podcast, who spent a good chunk of her career working for a Republican Speaker of the House. Not this one, but she's seen this movie before. And, Lisa, I'll start with you on what just took place here. Couldn't even clear committee? What does that tell us about the long-term forecast for this legislation?
Well, Joe, I think it means that there is a long way to go, and we're not going to get to the Rules Committee on money. Then that is for certain.
That allows time for a recovery, though, for Speaker Johnson. Is this a bump in the road? Chip Roy just needs to feel better? How do you get around this roadblock?
I'm not certain how they can. And in fact, I think if anything, this is going to be a weekend where they're going to work really hard to try to get this through. But once again, I mean, this goes back to this whole strategy that comes from the White House about a big, beautiful bill, right? And the House said that they didn't think they could get it done. And the Speaker said they didn't think they could get it done. And the Senate didn't think they could get it done. And and they were right. And so I think a lot of what's happening here is, you have an up and down vote in the budget. There's no opportunity in budget committee, so there's no opportunity for amendments. You've got 4 members of the Freedom Caucus that are in the budget committee, and those guys are absolutely, they were hardline no before they even went to the committee this morning. So this isn't terribly surprising, but what was supposed to happen is they were supposed to come to agreement. The bill was supposed to get out of committee. It was supposed to come from all the relevant committees. They were supposed to get it all together and get it off to Rules Committee for a Monday vote. Just feels like it's not going to happen. And so that to me tells me exactly what I expected to see happen. It's what people have been saying all along. This is a much, much longer road to go. The speaker is really eager to get this done by Memorial Day. It just doesn't seem like it's going to happen to me.
How many people have come on the air to say, yeah, give them to the end of the year. Meet me in September. Roger, the Freedom Caucus sent a tweet. They know the phone's going to be ringing soon here. Ralph Norman's in for it, right? Remember Donald Trump rolled Ralph Norman in the most recent speaker vote, took one phone call. It was like 10 minutes later, he went back and voted again. They together sent out a tweet here. These are the objecting representatives led by Chip Roy. We were making progress, it says, before the vote in the Budget Committee, and we'll continue negotiations to further improve the reconciliation package. We're not going anywhere. And we will continue to work through the weekend. Roger Fisk, what will happen this weekend?
A lot of long, detailed, frustrating conversations that, to Lisa's point, probably go nowhere. And thank you for having me. And it's wonderful to be here with Lisa. It's kind of the curse of the 3 Bs, right? It's the Biden administration tried to do Build Back Better. Now this is the big, beautiful bill. And I think every administration would be well served by looking at their predecessor, be they friend or foe, and learning from the mistakes and the successes. And one of the mistakes of the Biden administration was going with the Build Back Better bill that was just too big and too broad and too vague. And the bigger a bill is, the bigger there are kind of definitions of what beautiful are within that. Then you have hardliners like Congressman Roy, like you mentioned, Congressman Norman, Andrew Clyde, who Ralph Norman says is against this, but I guess by now is probably on record as definitely being against it. And that gives license to some of the other members of the GOP House to create some separation. Normally, this should have happened in the first 100 days when the incoming administration has momentum and a lot of goodwill, but this is post-Signalgate, post-Qatari plane, post a couple stumbles where some of those frontline Republicans, when you throw in the SALT issue and some of the other things that we've talked about earlier this week, that they realize maybe there's more value in having a little distance from the president than voting to kick a couple 100,000 people off healthcare in their district. And that's the dynamic they're going to try to align this weekend, and it'll be a steep climb for the speaker.
Noted, we're now living in the post-Qatari plane era of the Trump administration.
There's before the plane and there's after the plane.
That's right. We're in now AP territory. Right. Did you hear what Roger just said? Did you come up with that? Build Back Better, big, beautiful bill.
The curse
Lisa?
of the 3 Bs.
Are there parallels here?
Roger, you're a messaging genius, and I love that you said that. I've been laughing since you did. I mean, really, it just does seem like it's politically tone deaf, and it's a little more of the same. It's just, to me, like, here we go again. And you're absolutely right, Joe. That plane really, I think, took a lot of the political momentum out of this trip. So not only, look, this bill may have had. Trump is going to come back. He's going to celebrate. He's going to be pleased with how all the deals that he made while he was there and all the things that have happened. And the only thing that overshadowed all of that was this silly plane that he wanted to take back, right? The difficulty here, too, is that he had built up a lot of really good momentum that was going into this big, beautiful bill. And then the tariff discussion started to happen. And that, I think, the timing of all of that is really going to make it even harder, right? Because I have heard other folks smarter than me talk about how the carriages are coming, all of the containers are coming from China, and they've arrived. And so it's about to be very difficult for people to be happy with the way the economy is running.
You guys are on a roll. Roger, Chip Roy tweeting himself. This is not the caucus now. This is the individual. We're making progress, he says, but the vote was called and the problems were not resolved. So I voted no. He says, I'm staying in Washington this weekend to deliver. Medicaid work requirements must start now, not 2029, and the Green New Scam, he says, must be fully repealed, as President Trump called for. You would think that this is a message to Democrats having an argument from the other side of the aisle. Are Republicans arguing with Republicans about the Green New Scam?
It's amazing to me that people still refer to the Green New Deal as if it became law at some point, and when in fact it's still essentially kind of like a philosophical construct on behalf of the squad and things like that. The climate and the clean energy elements of what Biden actually did were much more focused on infrastructure jobs and retrofitting buildings and things like that than they were about some fundamental paradigm shift about how the country fuels itself. But you see ads and attacks all the time that refer to the Green New Deal as if it's part of the law of the land, when in fact it's not. And that to me plays into the performative nature that we're seeing on all sides. So you have your Thomas Masseys and these other people that are more than happy to slow these things down. And so I used to say this with Speaker McCarthy, you know, I would imagine Speaker Johnson gets up a couple days and says, why can't I just move back to Louisiana and have a normal life? This has to be incredibly frustrating because they have full control of the government, just as in the first 2 years of the first Trump administration. They couldn't even get their votes aligned to fund the wall. We're seeing that same kind of dysfunction play out now.
You know what, Roger, don't you
saying,
think
God, life was even better in the radio business. Lisa, please go ahead. What's your response? Because I want to hear your take on what's going to happen this weekend.
Well, what I was going to say was that that's the traditional playbook, and that would be that the president is in the White House and the Republicans in their House and the Senate, but it's the president himself that makes this so much more difficult. I mean, he continues to make news. It used to be that there was sort of this cadence between the White House and the Congress, and that's no longer the case. The president continues to push forward with this slash and burn and all of the things that are happening, and it's making it more and more difficult for people to really enact change. So what would ordinarily be like a trifecta of great things that could happen because Republicans are in power, they're working against each other, really, and that's, I think, what makes it even hard.
Well, bring us behind the scenes this weekend, Lisa. How does this work? Are they going to be in a committee room in the House? Are they going to be in an office building somewhere? They're going to be bringing in takeout? Are they wearing shorts and sandals? What happens over Saturday and Sunday that could change the picture by Monday?
I think it's a lot of all of that, Joe. I think everybody has a lot at stake, and they really want to see it happen. And so they're going to bring in every resource that they can. They're going to be having meetings late today into tomorrow. They're going to be having calls. They're going to be working the phones. They're going to be doing everything they can to try to find levers that they can pull in order to get this to the Rules Committee. Because also, too, the Republican House really does want to deliver for the president. They really do want this bill to get done. So I do think that they're going to call out all the stops. The difficulty here is that you've got this SALT group, the group from the Northeast primarily, that are going to fight like heck to make sure that SALT gets done right. And then you've got the Freedom Caucus that are working in the opposite direction. So if you're Mike Johnson, I mean, to the point that maybe running home to Louisiana sounds pretty sweet, it does seem like this is a really, really hard job, but I think he's the right guy for the job. It seems to me like he has the right tone and tenor, and he is got the right people around him that are helping him make good choices. And that is... We've seen two speakers walk away from this job, two Republican speakers walk away from this job, and there's a reason. It's because it's really hard to govern with so many different factions in the party right now, and that's exactly what we're seeing play out in real time.
You wonder if they make another run at him, depending on how this goes here. What's Hakeem Jeffries doing this weekend, Roger? He's watching TV, having a chuckle, watching the speaker do his work?
Popping popcorn, letting it, play out. The president has been the greatest unifying force for the Democrats, but this additional fratricidal tension just makes it that much easier for the Democrats to avoid news cycles and let this play out with as much coverage as possible. Because this really forces some of those frontline Republicans that Lisa was just mentioning to potentially take some difficult votes. And so for the Democrats, they largely just want to make sure that they don't stop the Republicans from digging their hole.
Wow. Time to order the takeout and the wine, boys and girls, because we're hunkering down for a working weekend. What a great panel with Roger Fisk and Lisa Camuso-Miller. They'll be back with us, of course, in our second hour here of Balance of Power. Thank you both for the insights and bringing your experience to the conversation. This is a fascinating moment that we're experiencing right now in Washington. Budget bill fails the Budget Committee, and big questions as to where we're going next. We'll explore more of this in our second hour and bring you a conversation with Congressman Nick Lillotta, one of the Republicans from New York, from the SALT caucus we've been talking about. Maybe he's got the keys. Kaylee Lyons is on the way in, and we'll welcome our global television audience coming up next, right here on Bloomberg.
From the world of politics to the world of business, this is Balance of Power. Live from Washington, D.C.
The bill couldn't even clear committee. Welcome to the Friday edition as President Trump's big, beautiful bill fails to pass the Budget Committee in the House. And Now the entire timeline is being thrown into question. I'm Joe Matthew alongside Kaylee Lyons in Washington. Thanks for being with us on the Friday edition of Balance of Power. Kaylee, a big point of disagreement remains lifting the cap on salt, so not a lot has changed since this time yesterday.
Yeah, there's still many who want the salt cap lifted even higher than $30,000, but then there's also fiscal conservatives who want to see the cost-saving measures kick in earlier when it comes to Medicaid work requirements, rolling back measures in the Inflation Reduction Act. And it's those fiscal conservatives that actually took things down in the Budget Committee today. And what was supposed to just be procedure. This committee doesn't have power to change the legislation, and yet it tanked anyway.
A procedural vote, essentially assembling the pieces of this bill. We saw a number of Republicans, to your point, from the Freedom Caucus, a la Chip Roy, Ralph Norman, and so on, voting with Democrats. And I suspect that their phones will be ringing today as President Trump makes his way back from the Middle East.
Yeah, keeping in mind that the president took to True Social today talking about how he wants Republicans to unite behind this one big, beautiful bill. But certainly you're seeing a degree of lack of unity, shall we say, on Capitol Hill right now. And that is actually where we go now live here on Bloomberg TV and radio. As joining us is Republican Congressman Nick LaLota, who represents New York's 1st Congressional District. He, of course, is in the SALT caucus and is one of the members who has been advocating for a higher cap. Congressman, welcome back to Balance of Power. Obviously, there are you and your colleagues who are pushing for a higher SALT cap up against some of these fiscal conservatives who worry what that does to the ultimate price tag. Is there a world here in which those who shot things down in the Budget Committee can get what they want and you get what you want too, or does someone have to lose in this equation?
Yeah, I'm comfortable we're going to land this plane. Ultimately, you know, we all support the concepts behind the One Big Beautiful Bill. We all want a stronger border security when we want to put the nation on a better fiscal track. And there's some other priorities in there as well that are really important. Energy dominance, really important to the House Republican Conference. We've met other deadlines in the past about, you know, responsibly raising debt ceilings, ensuring the government was funded, doing things responsibly like that under a deadline. I hope that we could do that again this time. You know, this One Big Beautiful Bill has a couple of warts on it, but I think that we can work through that in order to get it passed ultimately.
Well, Congressman, it's good to have you back. I know you weren't happy with the level that was coming out of the Ways and Means Committee when it came to lifting the cap on salt. So are you actually encouraged by what happened to the Budget Committee today, or are you concerned about the way forward?
Well, it just recognizes the obvious. There are numerous factions within the conference who are displeased with different aspects of the bill. SALT, of course, has gotten a lot of coverage, but there are folks in the conference who are concerned about SNAP, about Medicaid, and, of course, the deficit hawks have their concerns. So there are a couple of things holding this bill up. I hope that we get to yes, but with respect to salt is a pay-for. The bill as written right now from 2017 has the salt cap expiring at the end of the year and going back to unlimited. And unlimited salt over the next 10 years is valued at $1.3 trillion. And that's what's going to happen if no bill passes and if folks like me vote no and others vote no, and ultimately we don't extend those tax cuts. So I think the onus is on others to meet us a little bit in the middle. $1.3 trillion is a lot to incentivize some other great provisions in the One Big Beautiful Bill. The president's priorities on no tax on tips, no tax on overtime, no tax on Social Security, the AMT fix, the lower individual rates, lower business rates. My constituents want all of that, but we don't want to have to pay for the bill again like we paid in 2017. We want a little more fairness this time around.
Well, and Congressman, when you joined us a few days ago, you told us that this idea of a $40,000 SALT cap for individuals and $80,000 for married couples hadn't been explicitly put on the table, that it was something that was obviously in this discussion. Have you gotten an explicit offer for a higher SALT cap, or is that something you're expecting this weekend? Where do things stand?
Yeah, that 40-80 dynamic unfortunately had a poison pill in it, in that there was 40-80 for 4 or 5 years, and it dropped way down to 10 again for the next 5 or 6 years. That, unfortunately, is a gimmick. It's a scam. It just perpetuates the very thing my constituents and I are opposed to right now, this absurdly low 10K cap. That was really just a used car salesman trick that we didn't fall for. We're going to continue to negotiate in good faith to make sure that New Yorkers, New Jerseyans, and Californians get their fair share, because each of us are donor states. Each of our states' taxpayers send way more to Washington than we get back. New York gets about 91 cents for every dollar it sends to Washington, while Missouri, home state to the tax committee chairman, gets $1.60, and Louisiana, home state to the speaker, gets $1.78. So we're not looking for a handout. We're just looking for a fair share and an honest negotiation on how we can move this ball forward.
Well, I know this is a big issue for you. It's something you're passionate about. Congressmen and members of the New York delegation have been strident in their rhetoric in some cases. Would you be willing to vote no on this whole thing if it meant just eliminating the cap altogether, if you can't come to terms on the rest?
If it eliminates the cap altogether, heck, count me in. Let's book it as a yes and let's move on, if that's your question.